Welcome to Byju's Exam Prep IAS. This is Shyam Kakudia. Is there any issue with my sound? Please do let me know if there is any issue. Sir, you started the class late. Yes, I know. The reason was there was a certain technical issue. That's the reason we were not able to start. That's the only reason. Done? Okay, let's start. So yesterday we started with the concept of the GDP, right, or national income aggregates. In national income aggregates, what we've discussed yesterday, we started with the concept of GDP. What is GDP? Gross domestic product. GDP stands for gross domestic product. Gross domestic product, what does it refer to? The market price of all the goods, that is all the final goods and services. The market price of all the final goods and services which are produced in a country, in an economic territory, is referred to as the concept of a GDP. I told you that whenever you talk about GDP, please remember that the production should have happened in India. Is it okay? The production should have happened in India. That's very, very important. Whether produced by you, produced by me, or I have earned income, you have earned income, or a foreign company has produced in India, doesn't matter. Remember the point here. Whenever the goods or services, final goods and services, right, produced in India, that will be counted as a part of India's GDP. Okay. Now, the GDP can be calculated using three methods. GDP can be calculated using three methods. Right? What are the three methods? One, the output method, or basically the production value method. What is the output method? Whatever final goods and services are produced into, right, the market prices. Right, the final goods and services into the market prices. Second one is income method. What is this income method? Get the factor incomes of all the people in India, or everybody who has earned factor incomes in India. Get the sum total of it. That is the GDP through income method. Third one, expenditure method. What is this expenditure method? Whatever is the total expenditure in India on final goods and services, get the sum total of it. And because this is the total expenditure on all the goods and services in India, what you do is basically you subtract the value of imports and you add value of exports. Now many of you are saying there is an issue with the sound. I'll just... Okay. What about the sound now? Is the sound clear? Let me know. Is the sound clear to all of you? Done. Let's start. So basically the expenditure method. In expenditure method, get the sum total of all the expenditures in India. That is by companies, by households, as well as by government. And when you get the sum total to this, add the amount of exports we have done, because you have produced the exports in India, and subtract whatever is the value of imports. This is the GDP calculation methodology. And if you remember very correctly, at the fag end of discussion, okay, at the fag end of the discussion, basically I told you whether you calculate GDP through method number 1, 2, or 3. There are three methods. Whether you calculate it through 1, 2, or 3, the value should always be one and same. This is what we have discussed yesterday. Now let me pick up from there. Let me start the discussion from there. Now whenever I talk about GDP, I said there are three methods. But out of three methods, which are the most important methods used in India? One method that is used is the output method or production method, that we will discuss. Second, income method, very difficult to collect all the income data in India. But the third one, the expenditure method, that is also used. So first and third is used. But in this case, let me have a discussion regarding the production method, GDP calculation through production method. Now, before I start the discussion, please focus on the discussion. Please be very careful. Important question has already been asked by UPSC. The question asked was basically on this. But please be again very, very careful. Questions can be asked. Do not focus on anything else. Focus on the discussion, because a lot of concepts are involved here. Let me start. First one is, we change the base year. For the calculation of GDP, we change the base year. Earlier, the base year was 2004, 2005. Now the base year is 11 and 12. Now please read what is written in front of this. Please read what is written in front of this. It will be discussed when I discuss GDP deflator. Why? Sir, why you keep on saying like this? Simple. If I want to tell you what is the idea for base year, I need concept of inflation. Simple. I need concept of inflation. And I hope you know that we are yet to discuss inflation. So please wait. I will tell you the idea for base year, how base year is used, how it is first arrived at, or what is year decided as a base year. Then we'll have a discussion about it. So first point, simply remember right now, earlier for the GDP calculation, the base year was 04, 05. Now it is 11 and 12. Second point, coverage has been shifted to MCA 21. Earlier it was ASI. Now what is this ASI? Annual Survey of Industries. Now we are using the production data from Ministry of Corporate Affairs 21. What is this MCA 21? Follow the basics here. Imagine you want to find out all the final goods and services produced in India. Right? This is a final good. You want to find out all the final goods and services produced in India. Let me ask you a very simple question. Do you think it is easy to collect the data for all the final goods and services produced in India? Think of it. It is easier, right? Do you think it is easier to find how many final goods and services are produced in India, especially a country such as India? Right? It's very difficult. It's very, very difficult. If you ask me, sir, why it is very difficult? Let me give a very simple example. All of you have gone to the market, and in the market, tell me how many street side vendors, street side sellers are there who are selling final goods. There are n number of street side vendors. Do you think all of them are registered with the government? I hope you understand. Do you think all of them are registered with the government? Answer is no. So there is a large part of economy which is not registered, right? Which is not coming under any laws of government. This is generally referred as informal economy. Informal means what? These entities, or let's say these businesses, are not registered, are not coming under any of the laws of the government. In the sense, these are not registered. These are not registered under any of the provisions. So basically, collection of data will be very difficult there. That is one. Second, even if everybody is registered, do you think it is possible for the government to go to every company to collect the production data? Right? So all I'm trying to tell you is very simple. Collection of production data is not easy. It's very, very difficult. But you want the final goods and services. Is it okay? Right? The final goods and services, you require it. So what we did was, we have introduced a new system called as MCA 21. Ministry of Corporate Affairs 21. Right? The MCA 21 website, or let's say portal, has been established. And right, any company which is registered under MCA 21, they will have to report the data to the government. Right? So any difficulty with the second point, please do let me know. First one we have not covered. We'll cover it most probably next class when I cover inflation. So argument is simple. We want production data. So what we have done? We have set up a portal. All the companies which are registered, now they will have to report to me what is the production data. Now what is the use of it? You'll understand in some time. Please wait. Next one, earlier we used to calculate GDP through cost prices or factor cost. And now we have shifted to market prices. I'll repeat the statement. Earlier, we used to calculate GDP through factor cost. Now we have shifted to market prices. Now what is this factor cost and market prices? Please go back to yesterday's class as well as the first class. What is the idea for factor cost? If you are manufacturing this bottle, whatever input you have used, you have paid money for those inputs. Can I call these as factor cost? Let me know. I hope you understand this, right? You are basically manufacturing the bottle. So to manufacture the bottle, you will use land, you will use labor, etc., etc. And when you use all of them, you will pay money for it. I'll call it as a factor cost. So remember this. Earlier, the GDP was calculated using factor cost. Now we are not using factor cost. Rather, the final GDP value, whatever is the GDP value, when you read the newspaper, they'll say GDP value is this much for India. GDP value last year was this much. That GDP value that you're looking at is calculated using market prices. Now the question arises, sir, why? What is the difference? First and foremost, why? Why did we shift? Remember this, 2 decades ago or more than 2 decades ago, United Nations has introduced a new system. And that system famously refers to as Systems of National Accounts. SNA. I repeat, the United Nations has introduced a new system which is referred to as a Systems of National Accounts. And most of the countries around the world have adopted that methodology to calculate GDP. India has adopted that methodology starting 2014 and 2015. Is it okay? We adopted that methodology starting 2014 and 2015. That's the reason we have shifted from the cost price or the factor cost to the market prices. Now, what is the difference between a factor cost and the market price? Let me show it to you. Here is the factor cost. And what is the factor cost? Basically on land, labor, capital, and entrepreneurship. Now, some of you, when I calculate, you'll start asking me, sir, where is profit? My dear, please go back. It simply means you are not revising. In the factor cost, one of the costs that the company is calculating is profit itself, right? Profit itself. So factor cost, and here is the market price. How do I calculate market prices using the factor cost? Let's start. To the factor cost, I will add taxes. Now I'm simply writing taxes here. Specifically, these are indirect taxes. Now please do not worry about what is indirect, what is direct, etc., etc. That is not the scope of discussion today. Sir, when will you discuss indirect taxes? There is a separate chapter, very big chapter called as a taxation. I will tell you what is a direct tax, what is an indirect tax, etc. But is it okay if I say like this? Please understand now. Imagine the factor cost of the bottle is 100 rupees. Factor cost for the bottle is 100. Government will impose a tax of 10 rupees on the bottle. Now, is it okay if I say with the taxes being imposed by the government, market price of the bottle will go up or the price of the bottle will go up? All of you will agree? Taxes will increase the price of the bottle. Let's say government has imposed a tax of 20 rupees. But in addition to this, apart from the taxes, government may also give you subsidies. Possible? Government may also give you subsidies. Now, what is a subsidy? As of now, please understand, subsidy is an assistance given by the government. Subsidy is nothing but it is the assistance given by the government. Sir, what do you mean by assistance? All of you heard of Pradhan Mantri Garib Kalyan Anna Yojana. Let me know. Pradhan Mantri Garib Kalyan Anna Yojana. Have you heard of it? What is that? It is the assistance given by the government. Right? Food grains are given by the government. I hope you understand this. Right? So there is assistance given by the government. Right? This is generally referred to as subsidies. Now let me ask you a very simple question. You are manufacturing the bottle 100 rupees and government will give you 10 rupees subsidy. Government will give you 10 rupees. Now you tell me, will it reduce the cost of the bottle or not? Start answering, start participating, it becomes easier. You are manufacturing the bottle, you are incurring a cost of 100 rupee and government will give you 10 rupees. So will it reduce the cost of the bottle? Of course, yes, it will reduce the cost of the bottle. Can I write it like this now? Can I write it minus 10? So what is the market price? You have adjusted for taxation and you also have adjusted, right, a subsidy of 10 rupee. Now you will be selling it in the market at 110 rupee. Any difficulty in understanding how we shift from or how do we move from factor cost to market prices? It's a simple idea. You will add taxes imposed by the government and you will subtract subsidies given by the government. And once you adjust all of this, what you'll get is market prices. And as I was telling in the beginning, sir, what about profit? My dear, please go back to basics. It simply means you are not practicing, you are not revising. Where is the profit? Where does the profit actually come into picture? Profit is already there in the factor cost. Right? I told you that. Again, questions are on profit. Okay. So is the logic okay? Earlier, we used to calculate GDP using the cost prices. And now, we are using the market prices to calculate GDP. So whenever you come across GDP number in the newspaper, it is on market prices, not on factor cost, market prices. And finally, we are also using a concept called as gross value addition. GVA, gross value addition methodology. Now let me ask you a very simple question. You will purchase, let's say, you will purchase all the raw materials at, let's say, 50 rupees. You will purchase it at 50. Or else forget about raw materials. Imagine you are a middleman. Middleman means what? A manufacturer will sell it to somebody else, and this somebody else will, or let's say businessman one, this businessman one will sell it to businessman two. Now let me ask you a very simple question. If you purchase the bottle at 50 and sell it to next person, what will be the price? Will it be more than 50 or less than 50? Think of it. It's a very simple idea. When you purchase this bottle, you are also involved in the business. Okay. You are purchasing the bottle at 50. Now you will sell it to the next person at 50 rupees, more than 50 or less than 50. There are two people who say less than 50 rupees. My dear, this is my sincere suggestion to you people. Those two people, don't enter into business. Because only one bottle you are going to incur loss. You will sell it at more than 50 rupees. Does it make sense or not? You will sell it at more than 50 rupees. Now I'll ask you why. Right? Why? Why are you selling at more than 50? Your argument is simple. I have given certain services. I have provided certain services here. I purchased it, I stored it, I moved it, I sold it. Don't you want me to earn certain amount of money? That process is called as value addition. Is it okay? The process is referred to as value addition. Let me give you a very simple example. Again, whatever I've discussed in the factor cost and market cost, it is there. Have a look at it. Let me give a very basic idea for value addition. Imagine there is one industry in India, and in fact it is there. In the step one, we are going to mine out certain, let's say, iron ore. And once you basically mine out iron ore, mining means dig, right? You will basically dig the earth, take out the ore. You will sell it to a steel production company, right? Imagine you are the company A who is mining. I am the company B who is purchasing the ore from you, converting that into steel. And in the step second, I will sell it to another company C, which will manufacture utensils. What is utensil? Some of you might be having, right, a teacup in front of you. That is an utensil. Some of you might be having breakfast already in a steel plate. That is the utensil. Okay. Now, the company C will purchase the steel, manufacture utensils, and they will sell it to buyers. First question, just think of it. First question, don't you think at every step there is a value addition? Is it okay? Let me repeat it. Don't you think at every step there is a value addition? Meaning what? Everybody is adding certain value to the product. For example, if the company A has mined out iron ore, it will sell it to company B. Let's say at 10 rupees. Let's say at 10 rupees. Company B will purchase at 10, will use it to produce steel. It will not sell the output at 10 rupee. It will sell it at, let's say, 30 rupees. Now, when they will purchase at 10, sell it at 30, can I say company B has added a value of 20 rupees here? Company B has added a value of 20 rupees. And company C will purchase it at 30, will sell it to a buyer at 30 rupees. Of course, no. They will sell it, let's say, at 50 rupees. So they have purchased it at 30 and they've sold it at 50. What is the value addition? 20 rupees. Now, some of you might be asking, sir, why? Why are we doing like this? Why not we simply take all the goods which are produced, use it for the calculation of GDP? The idea here is, I told you yesterday, whenever you calculate GDP, you should count only the final goods. You should not count intermediary goods, you should count final goods. A simple question to you, the steel that is produced here, is it a final good or intermediary good? The steel that is produced, is it a final or intermediary? It's a intermediary good. Is it okay? Let me know if you have a problem with this. The steel that is produced is intermediary. Now the problem is, let's take an example here. Let's take a simple example. Imagine you purchased the steel worth 50 rupees. You manufacture the bottle, sold the bottle in the market at 100 rupees. Now don't you think out of 100 rupee, you already have counted the value of the steel. When you decide to sell it at 100, you already have counted the 50 rupees. Now, if you count steel separately, count the bottle separately, can I call this as a double counting? Let me know. Can I call this right as a double counting? That is, a steel of 50 rupees is taken individually and 100 rupee bottle is taken individually. But 100 rupees including 50 rupees, that will lead to double counting. So should we calculate even the intermediary goods? Absolutely no. We should not be counting intermediary goods value. Now, looking at the calculation that I've given here, right? Focus on this. Looking at the calculation that I've given here, that is company A will sell the iron ore to me at 10 rupees. I will produce a steel, sell it to company C at 30 rupees. Now, should I be counting 30 rupees in the calculation of GDP, or should I be adjusting 30 by deducting 10 rupees and counting only 20 rupees? Right? If I count 30 rupees in the calculation of GDP, that is double counting. Is the logic okay? If I take 30 rupees to calculate GDP, that is double counting. So what I will do? I will introduce a concept of value addition, so that at each and every step, rather than taking the prices at which these are being sold to calculate GDP, we will adjust for, right, whatever inputs they have purchased, whatever raw material they have purchased, so that there is no double counting. So that there is no double counting. Any difficulty here? Any difficulty, please do let me know. Why not count 50 rupee directly has the value of the previous steps? Where? Here. Right? Here you're basically saying here 50 rupees. Please understand this. In this context, what we do is basically we take the market value of final goods and services. But how do we arrive at that value? That is the process using the concept of value addition. Just to make it much more clear, have a look at this. Have a look at this. Right? Imagine mining is done and they will sell, right? Company A will sell the iron ore to company B. Same example, whatever I've told just now, I've written it here. The mining company will sell this iron ore to, right, let's say company B. At what price? 10 rupee. And, right, have a look at this. This 10 rupee will be the cost of raw material or the input prices for company B.
Now the company B will use it to produce a steel and sell it to company C. Company C will purchase it at 30 rupees. For them, it will be the cost of input. And they will sell it in the market at 50 rupees. Right? So basically what we will do is, we will calculate what is the value addition done at every step, and that will give us the gross value addition. Is it okay? We will calculate what is the value addition. In the step 1, value addition is 10 rupee. In the step 2, value addition is 20 rupee. In the step 3, value addition is again 20. So total value addition done in this sector is 50 rupees. Now this is from one sector. Have a look at this. This is from one sector. Can we use the same calculation for another sector? Think of it. Can we use the same for another sector? Can we use same for one more sector? You should say yes. Some of you are saying no. Why no? If you say no, I can't use it. Why? Can I use the same methodology to calculate value addition in textiles? Then you're not listening to what I'm discussing. Can I use the same methodology to calculate value addition in textiles? Yes. Can I use the same thing to calculate what is the value addition in, let's say, aluminum manufacturing? Right? Or let's say any other sector. Right? So what we do is, we will use this methodology to calculate value addition. We will use this methodology to find out what is value addition. Done? So this is the concept of gross value addition. Right? So understand logic here. Right? I'll just put in a nutshell what we have discussed so far. One, we have changed the base here. We are yet to discuss that. Second, earlier we used to collect production data through ASI, Annual Survey of Industries. Now we are not using that data. We are using one more data, that is MCA 21. Third one, earlier we used to use cost prices to calculate GDP. Now we are using market prices. Fourth one, we are using a concept called as gross value addition. Now let me introduce much more technicality to this. Earlier, if you remember, I told you that whenever you calculate the market prices, this is going to be a bit technical, follow this. Whenever you calculate market prices, there is going to be taxes. There is going to be taxes and there is going to be subsidies. All of you remember that? Right? Whenever you calculate the market price from the factor cost to market prices, taxes are added, subsidies are subtracted. Taxes will increase the price, subsidies will decrease the price. Now what we have done is, we have divided the taxes into two parts and we have divided the subsidies again into two parts. What are these? Let me start. The taxes are production taxes and product taxes. The taxes are production taxes and product taxes. And subsidies are production subsidies and product subsidies. Whatever I'm discussing here, it is there in this slide. Right? Don't say, sir, where it is written, etc., etc. It is there in the slide. I'm explaining it. Follow this carefully. We will divide the taxes into two parts. One is production tax. Second one is a product tax. We will divide the subsidies again into two types. One is a product subsidy. Second one is a production subsidy. What is the meaning? Let's start. Let me start with a very simple example. Follow the examples. You will find it easier to understand. Let me ask you a very simple question. Imagine government will give you, for every one bottle produced, a subsidy of 10 rupee. I'll repeat the statement. Imagine government of India will give you, for every one bottle that you're producing, a subsidy of 10 rupee. Now, have a look at this. Have a look at this. If you produce one bottle, you will get 10 rupee. Produce a two bottle, 20, three bottle, 30, four bottle, 40, so on, so forth. A simple question to you. The amount of subsidy that you are receiving in this example is it connected to volume of production or not? I will repeat it. The amount of subsidy that you are receiving, is it connected to the quantity, volume of production or not? Yes. These are generally referred to as product subsidies. These are referred to as product subsidies. So logic is, whenever you come across the term product, either product taxes, I'll give you example for that, or product subsidies, subsidies you will receive, it is connected to volume of production. Taxes you will pay, it is connected to volume of production. Sir, what is the example of a product tax? I'll give you same example. Imagine you are selling this bottle. For every bottle, government will impose a tax of 20 rupees. For every bottle, the government will impose a tax of 20 rupees. So one bottle, 20 rupee tax. Bottle number 2, 20 rupee tax. Third bottle, 20 rupee tax. If you sell 10 bottles, how much will be the tax collected by the government? 200 rupees. Is it okay? If you sell 15 bottles, how much will be the tax collected by the government? 300 rupees. Now same thing. Can I say the tax that is imposed here, it is directly related to volume of production. The tax that is imposed is directly connected to volume of production. So whenever government will impose a tax or give a subsidy and related to the volume of production, either tax imposed or the subsidy given is connected to how many goods you are producing, such taxes or such subsidies are referred to as product taxes and product subsidies. Any difficulty? Can I go forward now? Any difficulty here? Simple. It's basically connected to volume. It is connected to volume. Okay. Now come to the production. Come to the other side of production. Imagine you will purchase a land. Okay. Imagine you will purchase a land. Now when you purchase a land, you will pay taxes to government. I hope you know this. When you purchase a land, you will pay taxes to government. Sir, what kind of taxes? Stamp duties. Is it okay? When you purchase a land, you will pay stamp duties to the government. Now, simple question. The amount of stamp duties that you are paying to the government, imagine you are purchasing land to produce bottle, same bottle. You are purchasing the land to set up a manufacturing facility to produce the same bottle. Now, simple question to you, the amount of stamp duty that you're paying, is it connected to how many bottles you're producing? Just think of it. Apply common sense, you will understand. The amount of stamp duty that you're going to pay, is it connected? Some of you are saying yes. How? You're basically not looking at what I'm discussing then. When you purchase a land, you'll pay taxes to government, right? And that particular tax is imposed on the value of the land, not how many goods you're producing, right? So understand the logic here. Can I say stamp duties that you have paid as a manufacturer, it is no way connected. It is independent of quantity of production. Can I put it in a statement here? The amount of taxes that you have paid in this example, it is independent of quantity or volume of production, right? Such a type of taxes are called as production taxes. And trust me when I say this, manufacturers will pay lot of production taxes. They'll pay a lot of production taxes. Professional taxes are there, right? Stamp duties are there. Electricity taxes are there. There are so many taxes that the manufacturers will end up paying. And finally, production subsidies. Production subsidies. What is this idea for production subsidy? Have a look at this. Imagine you are going to move the goods. Imagine you are going to move the goods, right? That is transport. and you will use, let's say, railways to transport the goods. Now, the government of India, rather than charging you 10 rupees, right, ticket prices, rather than charging you 10 rupees, always charges less than this amount. Now, is it okay if I call this as a subsidy? Let me know. Is it okay if I call this as a subsidy? So when you're transporting, government is giving certain amount of subsidies to you. Do you think this subsidy is connected to volume of production that you're doing? I hope you understand this. Do you think the subsidy that the government is giving here, it is connected to volume of production? Absolutely no. How much you're producing doesn't have any connection to what is the subsidy given here. Or else I'll give you one more example. Follow this. Imagine you want to set up, let's say, electric vehicle production facility in India. You want to set up electric vehicle manufacturing facility. Government will say, I want you to produce more vehicles. So what I will do is, you want to set up the manufacturing plant. I will give you 1 crore rupees. Take 1 crore rupees, set up the manufacturing facility. A simple question to all of you. The amount of subsidy that you have received here, 1 crore rupees, do you think that is connected to how many goods you are going to produce? Is it okay? Is it connected with how many goods you are producing? Absolutely no. It is independent. I repeat, it is independent of volume of production. So again, the logic is very simple here. Whenever you are connecting to volume of production, whether you are paying taxes or receiving subsidies, whenever it is connected to quantity, volume of production, these are called as product taxes and product subsidies. And whenever you are paying taxes or receiving subsidies, and both of them are independent of volume of production, these are referred to as production taxes and production subsidies. Any difficulty here? Any difficulty? Because I'll go to the next point now. What is the next point? Imagine you are a manufacturer. Let's start now. Imagine you are a manufacturer, right? Now, if you want to decide what is the market price of the bottle, follow this carefully. If you want to decide what is the market price of the bottle, all of you will start with factor cost or not? Let me know. All of you will start with the factor cost or not? You will have to start with factor cost. Array, some of you are saying no. My dear, how will you decide what is the market price then? How will you decide what is the market price of the bottle? Tell me. Those who are saying no, tell me how will you decide? Right? Listen to the lecture carefully. Right? In fact, we have been discussing factor cost will lead to market cost. Formula is also written already. So first you will start with factor cost. And using factor cost, you will reach market prices. Now, simple question to you. You want to manufacture the bottle. You want to manufacture the bottle and right, you will purchase a land. You will pay stamp duties in purchasing of the land. Should you include the stamp duties in calculation of the market prices or not? Let me know. Right? You want to manufacture the bottle, so you purchase the land. Right? So you have paid stamp duties in purchasing of the land. Should you include that stamp duties in the calculation of market prices or not? The answer is yes. You should include production taxes as well as production subsidies. You should include both the production taxes as well as production subsidies. You should include it. Right? Some of you are saying no, it should not be included. My dear, as a manufacturer, right, understand this very carefully. Right? As a manufacturer, whatever taxes you are going to pay, which are connected to production of the bottle, you will transfer it to consumers. Remember this. I'll repeat it again. As a manufacturer, okay, as a manufacturer, whatever taxes you are going to pay related to bottle. You purchased land. For what are you using it? To manufacture bottle. You are paying taxes to the government when you purchase electricity. What are you using electricity for? Bottle. So argument is simple. Whatever taxes you have paid which are connected to manufacturing of the bottle, include it. Is the logic okay? Include it. Right? Please understand it. Include it. Don't tell me what I've told in the past. Come here. Focus on this, my dear. Focus on it. Right? You should include it. I'll tell you why. Why did you pay stamp duties? You tell me the answer now. Why did you pay stamp duties? Right? You paid stamp duties because you purchased land. For what purpose did you purchase the land? For manufacturing of the bottle. Who is using the bottle? Is it the manufacturer or is it the consumer? Who is using the bottle? Consumer. So now is it okay if I say anything related to the bottle, any cost incurred for the bottle should be paid by the customer? This is how the business actually works. This is how business actually works. Do not try to find fault with this model. It is how it should be. If you are manufacturing, any cost that you have paid for the bottle, you will transfer it to customers. Okay? Right? Now again, don't focus on stamp duties. Focus on the discussion. UPSC will not ask you about stamp duties. I gave you one example. Focus on the discussion. So you will start from the factor cost. You will adjust the factor cost with production taxes and production subsidies now. Is it okay? You will adjust the factor cost with production taxes and production subsidies. And when you adjust the factor cost with production subsidies and production taxes, this is referred to as basic prices. This is referred to as basic price. Is it okay? Can I go to the next one? Right? Can I go to the next one here? Right? Whenever you take factor cost, you adjust for production taxes and production subsidies, it is called as basic prices. Sir, why should we calculate basic prices? Again, understand this carefully. We want to move from the factor cost to market cost. But in between, from moving from the factor cost to market cost, unlike earlier where we simplified it, I'll say taxes and subsidies. I'll simply say taxes and subsidies. We have further divided the taxes, further divided the subsidies. So what we do now is, rather than directly moving from the factor cost to market price, there is a middle point now, pit stop like this. There is one stop. You will first move from the factor cost to the basic prices. Now from the basic prices, you will move to the market prices. Sir, how do I move from the basic prices to market price? And first and foremost, what is the basic price here? Basic price is the minimum amount of revenue that the manufacturer is expecting. Is it okay? I've given the definition here. Have a look at this. Basic price, it is the minimum amount that the manufacturer is expecting. The manufacturer is expecting certain amount of money from the market. That minimum amount is called as basic prices. Some of you believe that, basically believe that, sir, factor cost should be the minimum price. Factor cost should be the minimum prices. But the argument in the GDP calculation is no. Apart from the factor cost, you also have paid certain taxes. You already have paid certain taxes which are not connected to the volume of production. You also have received a certain amount of subsidies. You also have received a certain amount of subsidies which are not connected to volume of production. So you will have to adjust your factor cost with the taxes as well as subsidies. And those taxes are referred to as production taxes, and those subsidies are referred to as production subsidies. So I will start from the factor cost. I will adjust with the production taxes and subsidies. I will arrive at basic prices. Now, is it the selling price? Let me know. You have moved from the factor cost to, let's say, basic prices. Is the basic price a selling price? Is it a market price? Of course no. Why it should not be the market price? What about product taxes? What about product taxes? What about product subsidies? Now you will adjust the basic prices with product taxes and product subsidies. Now, after this, you will come to the market prices. Any difficulty here? Any difficulty in understanding the flow? I hope you understand. Any difficulty in understanding the flow? First, you start with factor cost. Simple. Always start with factor cost. You should not have any doubt there. Start with factor cost. Why? The money that you have paid for labor, the profit you want to earn, right? The money that you have paid for machinery, right? That's a factor cost. Start from factor cost. And with the factor cost, now adjust the production taxes and production subsidies. The new formula that you get or the new number that you get is referred to as basic prices. And what's the definition of basic prices? This is how MOSPI defines it. Basic price is the amount that is receivable by the producer from the purchaser for any unit of a good that is produced or services that is rendered. But only thing is that you will have to adjust. You will have to adjust for taxes as well as subsidies. Right? You will have to adjust for taxes as well as subsidies. Sir, should the basic price and MRP be the same? Of course, no. Of course, no. Basic price is the minimum amount. From this basic price, now we will adjust for the product taxes and product subsidies. That is the MRP that you get. That is the MRP that you get in the market. Okay? Any difficulty? What is the difference between basic price and the factor cost? My dear, if you are using factor cost and from the factor cost you are moving to the basic prices, adjusting both of these, don't you think there is a difference between both of them? Because when you take factor cost, simple, when you take the factor cost, you do not account for production taxes, production subsidies. I repeat, when you take factor cost, by the way, right, it should not be told in this class now because this is the third class that we are using factor cost. What are you counting in factor cost? It should be easy for you. What are you counting in the factor cost? You are counting in the factor cost, that is wages. You are counting wages. You are counting interest. You are counting profit. And finally, you're counting rent. Right? You're counting wages, profit, rent, and interest. Now, where is the idea of taxes that you have paid? Where have you counted the taxes that you have paid? Right? That is, let's say, production taxes. Where it is accounted for? You have not counted all of them. So what you will do? You will add the production taxes. Right, you will add production taxes and you have received certain production subsidies. Subtract production subsidies. Right, when you adjust for those production taxes and production subsidies, you will move from the factor cost to the basic prices. But you have not adjusted all the taxes as well as subsidies. Now what you will do? You will adjust for product taxes and product subsidies. You will get market prices. You will get market prices. Okay. Now some of you are looking at the definition, trying to poke holes in the definition. Follow this carefully. It is the amount receivable by the producer from the purchaser for a unit of a good or a service produced as output minus any tax payable plus any subsidy receivable. Sir, why have you written output minus a tax? It should be plus tax. My dear, please understand. You are looking at a different definition. I am telling you about a different calculation. Follow this very carefully. Imagine the factor cost is 100. Imagine the factor cost is 100. You are looking from 100 to basic prices. You're basically looking at like this. You're looking from 100 to basic prices. But in that case, you'll have to start accounting with factor cost. Did I start basic prices? That is, do I calculate basic prices in the definition using factor cost? Please understand, those who are asking me the doubt, sir, in the definition you have written minus tax, it should be plus tax. Those who are telling me that, have a look at it. Am I calculating basic prices in the definition using factor cost? Am I using factor cost to calculate basic prices here? No. I am saying, have a look at this. Imagine the market price is 150. Imagine the market price is 150. Now, subtract from this the product tax. Right? Product tax, subtract it and add product subsidies. Is it okay? Subtract from this product tax and product subsidies. That is the basic price. I hope you understand this. That is the basic prices. If you're still confused, I'll give a calculation. Please do not by heart it. UPSC will not ask you this. Let's say the factor cost is 100. Production taxes are 20 rupees. Production subsidies are 10 rupees. Basic prices will be how much? 110 rupees. Is it the market price? Is it the market price? No. Now you will have to add product taxes. Let's say 30 rupees. And you will receive product subsidies, let's say 20 rupees. As a result of this, what will happen? The market price will be 120. Market price will be 120. Now look at the definition. Please look at the definition now. The basic price is the amount receivable by the producer from the purchaser. Purchaser means what? Customer. For a unit of good or a service that is produced as output minus any tax payable plus any subsidy receivable. Meaning what? Let me explain it. All of you know, looking at the formula, what is the basic price here? What is the basic price? 110. What is the formula telling you? The customer has paid 120. The customer has paid 120. Right? The customer has paid 120. How do I use it to calculate basic prices? Minus any taxes plus any subsidies. Is it okay? Minus any taxes, that is product taxes, right, plus product subsidies. How much value you will get? Calculate. How much value you will get? You will get basic prices. Now, any problem here? Any problem with all of this? Right, so this is generally how the GDP, right, the calculation of GDP is done at market prices, now. Now, some of you are saying, but sir, earlier you said, we do not take factor cost. We do not calculate GDP using factor cost. What I meant was, follow this carefully. Some of you generally get confused. Earlier, we used to calculate GDP only by this. We did not use this to calculate GDP. Meaning what? Imagine 10 goods are produced. I'll take a simple example. Imagine 10 goods are produced in India and sold. Earlier, what we used to do is, we used to calculate GDP like this. 100 into 10. The GDP will be how much? Right? GDP will be 1000 rupees. This was how GDP was calculated earlier using factor cost. Now we are not using this calculation. We are not calculating GDP like this. Now same 10 goods, market price is 120. Now it will be 120 into 10, 1200. This is the GDP calculation now. Right? I hope you understand all these concepts now. Right? Have a look at this. What are included in what, right, etc., etc. The whole idea is given here. Right? In case of production taxes, what is the meaning? In case of production subsidies, what is the meaning? Product taxes, product subsidies. What are the examples of each of them? I've given here. Please go through it. Please go through it. But the argument is very simple here. Rather than simply by hearting, I know many of you will simply try to by heart. argument is very simple. What we have done is we have divided the taxes into two types, subsidies into two types. One which is connected to quantity, volume of production, and second which is independent of volume of production. Whenever it is connected, we'll call them as product taxes, product subsidies. And when it is independent, it is production taxes, production subsidies. Done? Okay, can I go to the next one here? Can I go to the next one? Right, what is the next point here? Simple. It's very simple. I need to put everything that we have discussed in the formula. Right, I've told you we need to start with the factor cost. We need to arrive at market prices. Now let me ask you a very simple question. Many of you looking at these two formulas will have a heart attack now. Don't have a heart attack. You've understood the earlier one. This is the same thing. Let me ask you a very simple question. You are producing the goods, but to produce the good, you are purchasing raw material from me. You are producing the good, but to manufacture that good, you are purchasing raw material from me. Should we calculate GDP at market prices for you as well as me? Or should we calculate GDP using value addition? Think of it. Just think of it. Right? Imagine the earlier example. Iron ore is manufactured, sold to the steel manufacturer, then it is to the utensil manufacturer. Right? So is it okay if I say that GDP calculation will not be done just like that? We will use value addition at every step. We will use value addition at every step. That is gross value addition at factor cost. Any problem? I'll start from here. Most of you will say, sir, you should have written like this, that. Don't worry. I will start with gross value addition. So gross value addition at factor cost. Now, to the value addition, I will add production taxes and I will subtract production subsidies. So if I add production taxes and subtract production subsidies, what will I get? Basic prices. I'm explaining the same thing. What will I get? Basic prices. And that basic prices is not just any basic prices. It is again basic prices where we are simply calculating value addition. We are not calculating every good and service here. We are simply calculating value addition. Right? So we will arrive at gross value addition at basic prices. And once you arrive at gross value addition at basic prices, now adjust with product taxes and product subsidies. Right? So what we will get is GDP at market prices. These are the two formulas. Please by heart it. Right? And again, if you have understood it, it should not be the process of by hearting. You shouldn't by heart it. But some of you will simply say, sir, very difficult to remember. Then my argument is by heart it. You should not by heart it. I'll tell you why. Follow this. Is it okay? Let's go step by step. I will start at factor cost. But the problem here is, whatever I've discussed now, apply it. If you calculate factor cost for everybody in India, that will lead to double counting. How do you adjust for the double counting now? You should not simply calculate factor cost. You should calculate GVA at factor cost. Agreed? You should calculate the GVA at factor cost. Value addition, that is very important. Now to this add production taxes and subtract production subsidies. Will you get market prices? No. Right? To arrive at market prices, there is more taxes, more subsidies. What you will get is GVA at basic prices. But this is GVA at basic prices. You need market prices. What is left out now? To the GVA at basic prices, add product tax, subtract product subsidies. subsidies. What you will get now? You will get GDP at market prices. GDP at market prices. This is how you need to remember it rather than simply by-hearting it. By-hearting means sometimes when you come under pressure, you are tensed, etc., you might mix up. You might simply mix up. But rather than by-hearting, understand the flow. Once you understand the flow, nothing. It's very, very easy. Done. Shall I go to the next one now? Can I go to the next one? This is how the GDP. Right now, this is the GDP. Is it okay? How GVA at first step, my dear. Again, the same idea. If you calculate a factor cost, I'll give a very simple example. Imagine your company A, I'm company B, and these are the only two companies in India. These are only two companies in India. Now, if I take factor cost of B as well as a factor cost of A and use it to calculate GDP, now you tell me, I am supplying raw material to you. Will it not lead to double counting? Just understand it. Will it not lead to double counting in the system? Of course, yes. Because my factor cost is also considered. Your factor cost is also considered. And your factor cost already involves the cost of raw material. So are we not counting the raw material twice here? That's a reason to account for double counting. What we do is we simply use gross value addition. Not simply value addition, gross value addition. Right? Because value addition will basically remove whatever is the cost of raw materials. Whatever input we have purchased for which we have paid money, that will not be counted twice in the system. That is the whole idea of gross value addition. And once you adjust for product taxes and product subsidies, you will get market prices. Market prices of what? All the final goods and services. That's the reason I've written GDP at market prices. Okay, so this is how the GDP is calculated, right? A and B will be having GVA. My dear, B has sold raw material to A. Understand this, B has sold raw material to A. So whatever B's production is there, it is already accounted in the value of A. Right? How can you count both of them separately? You should not count it. You are basically counting it twice. Okay? And this is how GDP is calculated. Can you explain with example? That is what I did just now. Okay? Will VAT calculation be different for crude because they are exporting? Again, that is different. Don't worry. Don't bring everything that is there in the economy, try to adjust it here. We have not discussed how fuels are taxed in India. Right? Let's understand it later. Okay. Will every product have subsidy? Absolutely no. Absolutely no. Right? Some of you are asking, sir, what if subsidy is not there? Simply write 0 then. Very simple. If there is no product subsidy, write it as 0. If there is no production subsidy, write it as 0. That's it. Right? That is how you account for whatever is there in the economy, whether there or not there. Okay. Now, difference between VA and GVA. What is gross? Gross means total. What is gross? Gross means total. I gave you an example of value addition in steel sector. Can we calculate value addition in textile sector? Can we calculate value addition in electronic sector, etc.? So when you take all the value additions which are done in the economy, that is called as gross value addition. Okay, let's go to the next one. Whenever you talk about GDP, what are some of the things that you need to be very careful about? One, whatever is the services of the housewives, it is not counted as a part of GDP. I repeat, whatever is the contribution done by the housewives, that's very important. Housewives. Why housewives, sir? Why specifically housewives? Simple, because the services are provided for which money is not paid. That is very important. Services are provided, money is not paid. Right? For example, have a look at this. In some time or in any moment now, right? I'm pretty sure, at least in most of your houses, your mother will walk in with a cup of tea, cup of coffee, and a plate breakfast, right? Looking at you people in a worrying eyes or concerned eyes because you are studying economics now. They will come and they will hand over the breakfast to you and go. Now, how many of you will take out the purse and pay for the breakfast? Let me know. Right? You're sitting in the home, your mother or your father will bring the breakfast and tea, give it to you and go. How many of you will basically take out your purse and pay money? Try it today. Try it and tell me what will be your experience. Right? First, you will get very nice tight slap. First one is that. Second one, you will see what will be the escalation. So have a look at this. Argument is simple. Lot of people in the houses will provide services. But are we paying money for it? Are we fixing a market price for it? No. So that's the reason services which are generally provided by the housewives is not accounted in the calculation of GDP. Next one, black money. What is the idea for black money? Black money means any amount of money on which tax is not paid or tax is evaded. Understand this very carefully. Any amount of money in the economy on which the tax is not paid, tax is evaded, is called as black money. Sir, what do you mean by that? Imagine I've earned this 100 rupee. Simple. Understand the basics here. Imagine I've earned 100 rupee. I will not disclose, right? I will not disclose this amount of income to the government. Is it okay? Now, because I'm not disclosing the amount which I've earned, will I pay taxes on it? Disclose means I'm not giving the information to the government. So when I don't disclose the amount of income, I will not pay taxes to the government. This 100 rupee becomes black money. Any difficulty in understanding what is the idea of black money? And some of you will ask me, sir, 100 rupee, how did you generate this 100 rupee? Either I could have generated it through legal means or I could have generated through illegal means. For example, I have sold the property in my place. There was a property, I have sold it. The actual cost of the property, when I sold it, the actual cost, the actual money I've received is, let's say, 200 rupees. Actual money I've received is 200 rupees. But when we are drawing that agreement, when we are writing in the agreement, we'll simply say, I've sold the property only at 100 rupees. I hope you understand. If I've earned 200, but I disclose only 100, what will the remaining 100 rupee become? It becomes black money. And because you have not disclosed 100 rupee, you will not pay taxes to the government on 100 rupee. One example. I'll give you another example. I'll give you one more example. I've sold drugs. Again, just a hypothetical example. I've sold certain drugs in the market. Right? I am involved in human trafficking. Right? Child trafficking, etc., etc. I've generated money, 100 rupee. Will I go to the tax authority and say, please collect tax on this because I've sold certain ganja in the market and I've earned 100 rupee? Then they'll basically say, please come inside. They'll ask me to come inside and they'll directly put me into jail. So argument is simple. Lot of black money is generated. It is very difficult to find out how much is the amount of black money. There are different formulas, but none of them will give you exact number. Why? Black money is basically getting circulated. There is no paper track of it. There is absolutely no paper track. So that's the reason whenever black money is generated, and in fact it is there, black money is there in India and as well as many other countries. So whenever there's a black money, it is very difficult to account black money in the calculation of GDP. Third one, transfer payments. Third one is transfer payments. What is a transfer payment? Simple. Transfer payments are one-sided transfer of money. I repeat, what is a transfer payment? It is a one-sided transfer of money without any exchange of goods and services. I'll repeat it, understand this. What is a transfer payment? One-sided transfer of money without any exchange of goods and services. So what do you mean by this? Imagine I have this 100 rupee. I will go to the market. I will purchase a bottle or let's say a product and I'll pay 100 rupee. Is it okay? I hope you understand this. I have 100. I will go to the market. I will purchase a bottle, let's say this bottle, and I'll give 100 rupee. Is there an exchange of goods and services? Yes. And I've paid 100 rupee. Now tell me, looking at this example, can I say this 100 rupees a transfer payment? Let me check whether you're following the discussion or not. I've gone to the market, I've paid 100, I've purchased a bottle. Can I call this 100 rupee as a transfer payment? No. You should not be calling this 100 rupee as a transfer payment because there is there is an exchange of goods and services. It is not a transfer payment because there is an exchange of goods and services. I've written that. It is a one-sided transfer of money without any exchange of goods and services. So then what is the example? Pension payment. Pension payment. You tell me, pension payment. Don't you think the pension that is paid by the government, it is one-sided transfer? Is there any exchange of goods and services? Or else, I'll give you a current affairs example. Pradhan Mantri Garib Kalyan Anna Yojana. But again, this is a wrong example. I'll tell you why. Pradhan Mantri Garib Kalyan Anna Yojana. Again, wrong example. I'll tell you why. Please understand this. In Pradhan Mantri Garib Kalyan Anna Yojana, government is giving subsidy to you. Are they getting any services from you? Are they taking any good from you? Of course, no. Right? But again, why I said this is a wrong example? Money is not paid here. I hope you understand this. Money is not paid. Right? That's the reason I said it's a wrong example. Or the best example, remittances. Remittances. India is one of the largest recipient of remittances, we'll say. What is the meaning of remittances? The funds which are transferred from the Indians who are living outside India. Simple. Right? The funds which are transferred from the people who are living outside India, right, back to India. For what purpose will they send this money? Simple. They will send it for, right, let's say friends. They will send it for relatives. They will send it for spouse. They will send it in the form of a gift, etc. So understand the logic here. Whenever these kinds of one-sided transfers, one-sided, unilateral means one-sided, right? So whenever you talk about one-sided transfers like this, these are generally referred to as remittances, or these are referred to as transfer payments, right? So transfer payments, because there is no exchange of goods and services, right? That is also not counted when you calculate GDP. And finally, goods which are resold. Remember this. Goods which are resold by the government. Goods which are resold in the market. That is also not counted in GDP. Why, sir? Take an example. Take this example. Imagine the bottle was produced in 2022. I purchased the bottle. Simple. I purchased the bottle. Now, don't you think because it was produced in 22, I have purchased it, it is already counted as a part of GDP for 22? I hope you understand. Already counted. Now, imagine I will sell it to you. Don't ask me, sir, why will I purchase bottle, that too used by you? Don't say that. Right? Don't worry about the example also. Imagine I will sell it to you. Should you count the value of bottle again? No. If you count it, again you are counting twice, but in 2 different years. So whenever you're selling, right, you're selling the goods, second-hand goods, etc., or the goods which are already sold in the market, these will not be counted as a part of GDP, right? These will not be counted again as a part of GDP. Done? Right? So these are some of the things that you're supposed to exclude, right? Exclude, right, the concept of in the calculation of GDP. What if there is a value addition? Value addition will be counted. I'll give a very simple example. All of you heard of second-hand cars? There are a lot of companies. Which are selling second-hand cars. But please understand this. If you purchase a second hand car and let's say hypothetically you pay 5 lakh rupees. I hope you understand. Hypothetically you pay 5 lakh rupees. All the 5 lakh will not go to the earlier owner of the car. Some of it will go in the form of commission. Some of it will go in the form of commission to, let's say, Maruti company. In fact, there is a company, Maruti True Value. You must have heard of it. Maruti True Value, which is involved in selling second-hand cars like this. So understand the logic here. Let's say hypothetically the commission is 50,000 rupees. So out of 5 lakh rupees, 4.5 lakh rupees, it is going to the car owner, earlier car owner. And 50,000 rupees is going to the Maruti company. Now, don't you think this 50,000 rupees represents services which are generated today? I will repeat the statement. The 50,000 rupees, that is the value of 50,000 rupees, is it not representing services which are generated today, that is in the current financial year? And because it is leading to generation of services, I will count the commission as a part of GDP, but I'll not be counting the value of the car. I will not be counting that 4.5 lakh rupees. Okay, right? So these are certain very important aspects related to, right, basically the calculation of GDP. Why he gives money to the company? My dear, because you do not know how the car reselling works. If I take your car and sell it, should I not earn money? What is your understanding there? Let me know. What do you think? Why I am providing services to you? Why should I provide services to you then? Right? So again, it's basically how the economics works. Right? Then you don't even know how actually companies work in the market. Okay, done. Shall I go to the next one here? Right? Can I go to the next one? So this is the discussion regarding right, this is a discussion regarding GDP. Again, sir, what if that is sold, this is sold? My dear, if it is sold again in the market, if commission is provided, count commission. It's as simple as that. Don't worry, sir, if that is sold, if this is sold, if that is sold. Why? There are hundreds of products in the market. You want to understand for all the 100 products. Simple. If commission is there, count the commission. Right? If commission is not there, do not count it. It's as simple as that. Okay. Let me start. Next concept is gross national product. Can I go forward? Gross national product. Now, before I start, first point. Gross domestic product. Whatever is produced in India. I'll repeat the statement. Whatever is produced in India, right, we'll count it as a part of India's GDP. Now, let's take a very simple example. If this bottle is produced in USA, will it be counted as part of India's GDP? Think of it. If this bottle is produced in USA, will it be counted as part of India's GDP? It should not be. It should not be. Now, understand this carefully. Whenever you talk about GNP, gross national product, that's very important. Gross national product. What's the definition? Let me start with the definition first. Gross national product simply refers to the market price of all the goods and services. The market price of all the goods and services which are produced by the nationals of a country. Understand the difference here? I'll give you examples. Understand the difference. In GDP, as long as it was produced in India, we counted it as part of India's GDP. In GNP, we are not worried whether it is produced in India or outside India. What is our focus here? Focus is it should be produced by the nationals of the country, right? Such as citizens. It should be produced by nationals of the country. Whether the nationals are they producing in India or outside India doesn't matter. It should be counted as part of India's GNP. Let me give you examples. Please look at the table. Please look at the table. Again, I'll repeat it. GDP in India. GNP produced by nationals. First one, Indian company is working in India, and let's say they have earned a profit. The profits are generated by Indian company. Should it be counted as a part of GDP? Yes. Should it be counted as a part of GNP? Of course, yes. That because it is an Indian company. Second one, Indian company which is working outside India, they have produced goods, they have earned profits. I hope you understand this. A company, right, an Indian company, but it is earning profit outside India. Now, should I be counting that profit as a part of India's GDP? No. Any difficulty? Because the profit is not generated in India, it is generated outside India. But whether they are producing in India or outside India, is it not an Indian company? Right? Yes, because it is an Indian company, the profit generated by Indian company, even outside India, will be counted as a part of India's GNP. Third one, Indian citizen. A citizen of India, let's say a software engineer, will go for 3 months, 5 months to USA and will earn a salary. Now, point number one, the citizen is earning the salary outside India. Citizen is earning the salary outside India. Should we count it as part of India's GDP? No. But this is an Indian citizen, part of India's nationality. So we will count it as a part of India's GNP. Point number four, foreign citizen who is working in India. Right? Because the salary is earned in India, it is one of the factor incomes. I'll count it as part of GDP. But this is a foreign citizen who is there in India for, let's say, 5 months or 6 months. So I will not count it as a part of India's GNP. And the fifth one, a foreign company which is working in India has generated profit. It is counted as a part of GDP of India, but not part of India's GNP. Any difficulty in understanding any one of them? It's basic idea. It's a basic concept, right? Whether produced in India or not, count it part of GDP. If it is produced by Indian national, count it as GNP. Point number four, foreign citizen is working in India. My dear, GDP, again you're missing the point. What is GDP? Production should happen in India, right? The whole Ramayana is over now. Production should happen in India. Foreign citizen is earning salary in India. So it should be counted, of course, as a part of GDP only. Okay. So again, this is how we need to understand, right? We need to understand the concept, right? The idea of a GDP and a GNP. Now, how do we calculate GNP? How do I calculate GNP here? Right, follow this carefully. We already have the GDP value. We already have the GDP value, gross domestic product. Now, from the gross domestic product, we will adjust with a factor called as net factor income from abroad, NFIA. I'll repeat, the long form of this is given. We already have GDP. From the GDP, right, we will adjust certain numbers, which is generally referred to as net factor income from abroad. Sir, what do you mean by this? Follow this very carefully. All of you remember the concept of factor incomes? Let me know. All of you remember the concept of factor incomes or not? Factor incomes. What are factor incomes? Wages, interest, right, rent and profit. Simple. Wages, interest, rent and profit. Now follow this carefully. Follow this carefully. In the calculation of GDP, all these factor incomes are already counted. Right? All of these are counted. Right? Because some of you will simply say, sir, but you started the discussion with factor cost. Don't be confused now. You should not be confused. Can I say factor cost is nothing but factor incomes? Simple idea. Can I say factor cost is nothing but factor incomes? We already established it. So argument is, when I calculated GDP, gross domestic product, all the factor incomes which are generated in India are counted. All the factor incomes have been counted. Now let me focus on one of them. Let's say wages. Right? Let's say wages. Imagine this is how you have calculated. Follow the calculation. Imagine this is how you have calculated. Wages in India are 20 rupees. Interest is 30. Rent is 10. And profit is, let's say, 40. Simple number so that you understand it. Wages 20, interest 30, rent 10, profit 40. What is the GDP of India? What is the GDP? 100 rupee? At 100. Again, don't say, sir, taxes are there, that is there. Let's focus on this. 100 rupee. But when you talk about wages, imagine out of 20 rupees, this is how the wages are divided. This is how the wages are divided. Out of 20 rupee, 5 rupee was earned by an Indian citizen. 5 rupee wages was earned by Indian citizen. And 15 rupee was earned by a foreign citizen. A foreign citizen in India. A simple question to you. When I calculate GNP, gross national product, should I be counting wages earned by the foreigner? Let me know. When I'm counting gross national product, should I be counting the wages earned by the foreigner? Should I be earning factor income earned by the foreigner? Answer is no. Counting in the sense, should I add, right, these wages? No, you should not be counting it. But it is already there as a part of GDP. How do I adjust it? This is how adjustment is done. GDP is taken from the GDP. From the GDP, whatever factor incomes, whatever are the factor incomes earned by non-nationals. I'll simply write NN. What is NN here? Non-nationals. That is, these are not Indian nationals. Whatever factor incomes are generated by the non-nationals, I will have to subtract it. Is the point one okay with all of you? I will have to subtract it. Why? GNP do not count, right, other nationals here. But there is one more adjustment. There is one more adjustment. What is one more adjustment? You have gone to USA. Have a look at this. You have gone to USA. You have earned a salary of 10 rupee in the USA. Was it counted in the calculation of GDP? That is also factor income only. But because you have earned outside India, was that counted in GDP? No. But don't you think when you calculate GNP, it should be counted? When you calculate GNP, should it not be counted? Of course, yes. So what I will do? I will add factor incomes. I will add factor incomes which are generated outside India by the nationals. Simple. I will add factor incomes generated by nationals, but not in India, outside India. Because at the end of the day, what you require? You simply require this. Factor incomes generated by nationals living in India, living within India, and outside India. All of you will agree? If I calculate factor incomes of all the nationals of India, whether they are living within India or outside India, if I get that and if I get the sum total of all of it, that will give me gross national product. So what I will do is basically this. I will take GDP, and in GDP already this component is present. In the GDP, this component is present. But apart from this, there is also one more component. Factor incomes generated by non-nationals. It could be wages, it could be profits, it could be rent, etc., etc., etc. So what I'll do, I will subtract those factor incomes, and those nationals of India who have earned wages, profits, but outside India, I will add it. So what we get, right? I will have 1, I will have 2. get the sum total of this, that is called as gross national product. That is basically referred to as gross national product. And this is how the gross national product is calculated. Any difficulty here? Any difficulty, please do let me know. How can we identify foreign worker and Indian worker? My dear, government has all the data, right? Government already has all the data. Don't you think people who are coming into India, foreign software engineers who are coming to India, the company will not report to government saying that out of 100 employees, 20 are foreigners, 80 are Indians. Do you think government doesn't have even this data? Then just think of it. Right, so this is how gross national product is calculated. Now have a look at this. Let me ask you a simple question. Between GDP and GNP, focus on this. Between GDP and GNP, which one do you think will give you quality data? Underline the term. Between GDP and GNP, as an Indian, think as an Indian, which one will give you quality data? GNP will give you quality data. All of you will agree? Not GDP. Why? GDP, I'll give a very simple example so that I make you understand. I'll give a very simple example. Do you want to find out how much total profits earned by Indian nationals? Do you want to know how much is the total wages earned by Indian nationals? Total rent earned by Indian nationals? Of course, yes. Right? That is important for me. I want to know how Indians are performing, how Indian companies are performing. I want to know that. But will you get that particular data from GDP? Tell me. Will you get that data from the GDP? What does GDP tell you? GDP simply tells you market price of all the final goods and services is this much. Take it. But out of that, how much is the profit earned by Indian companies? Will you be able to come to know? No. How much is the wages earned by Indian nationals? Will you come to know? Absolutely no. That's the reason we say in GNP you can understand it. When you look at the GNP, you can understand it. You can realize, okay, Indian nationals, right? Let's say companies, owners, entrepreneurs, employees, they are earning this much amount of money. They are making this much amount of a profit, etc., etc. That's the reason GNP is a better qualitative tool compared to GDP. Okay, done? Can I go to the next one? Can I go to the next one here? Right, so I've given the same calculation here also. GNP is equal to GDP, right? Adjust that with net factor income from abroad. What do you mean by net here? Net means simple. Understand this, sir. You have written net. What is the meaning of net here? Take this example. Take this example. In this example that I've written here, can I say that 15 rupee factor income should not be counted as a part of India's GNP? Whereas, right, I told you, you as a software engineer, you have gone to USA, you have earned a 10 rupee income there. It should be counted as a part of India's GNP. So when you take GDP, out of that, how much factor incomes should be subtracted? How much factor incomes should be added? The difference between that is called as net. Is it okay? I'll repeat it. Out of the GDP, you are supposed to take out certain factor incomes and add certain factor incomes. The difference between that or the outcome of that, it is called as net. Any difficulty, please do let me know. Right? We calculate net factor incomes, including, right, wages, including profits, right, including, let's say, rent, right, etc., etc. Again, net is very simple, my dear. Net means factor incomes. When you calculate GNP, are supposed to be counted. Some of the factor incomes are supposed to be counted. Some of the factor incomes are supposed to be subtracted. The difference between that is called as a net. Is it okay? I'll repeat it. The difference between factor incomes which you are supposed to count, that is add, and factor incomes which you are supposed to subtract, it is called as net. Net factor income from abroad. Okay, so this is basically the idea of a gross national product. But sir, all of them are not contributing to Indian economy, so how GNP can be more reliable? If they're not contributing, that's a problem with Indian economy. Don't you think you'll find out? That is, understand this carefully. Whenever you compare between GDP and GNP, you realize that GNP is smaller than GDP in India. And this is not the same for all the countries. Right? The GNP is smaller than GDP of India. What does it mean? It simply means foreign factor incomes, that is factor incomes generated by non-nationals, is higher in India. Right? Logical or not? Let me know. If GDP is greater than the GNP, what is the meaning of it? Right? The factor incomes generated by non-nationals is higher in India compared to how much we receive. That's a problem. That's a problem. In the sense, we are more dependent on foreign companies in India. We are more dependent on foreign capital in India. That is a concern there. Okay. That is basically the idea of a GNP. Done? Any doubts here? Okay, let's take a break before I go forward to the next one. NDP, let's take a break. We'll start at 8. We'll start again at 8 AM, not PM, AM. Okay, welcome back. Am I audible? Am I audible? Why GV at basic price is considered GDP at EMP? My dear, you need to move from factor cost to market prices, right? Simple question to you people then. You need to move from factor cost to market prices. But you need to adjust production taxes, product taxes, production subsidies, product subsidies. Rather than taking all of them and dumping it, right? What we do is step by step from the factor cost, we will adjust production taxes and production subsidies. What we get is basic prices. Then we adjust that with the product taxes and product subsidies, we get market prices. Okay. Can the schemes, subsidies be transfer payment? Yes, a lot of subsidies which are given by the government are examples of transfer payments. Okay, let's continue. Let's continue. Next one is gross national, net domestic product. Idea of net domestic product. Now, what is this idea for net product? Net here, right? Understand this. What is the idea for net here? Right? Basically, whenever you produce goods and sell them in the market, there are certain goods such as capital goods. All of you will agree? There are goods which are referred to as capital goods. Right? I hope you remember this. Capital goods. Right? What is a capital good? Anything that is produced by us which will be used for production, which will be used for supply of goods and services in the market. For example, machinery. Very simple example, machinery. This is point number one. Point number one. Second point, let's go point by point. You follow it carefully. Follow it carefully. Here is example one. In example one, a manufacturer, or I'll simply write company, because manufacturer, it's a very lengthy term. A company has, let's say, 2 machines. It has 2 machines. In example 2, there is, right, let's say same company which has 2 machines. Now you'll simply say, sir, you have gone mad. Early morning you're writing the same thing twice. No. Let me go forward now. In the example 1, company has 2 machines, and let's say they will purchase 1 more machine in addition to the 2 machines. This year, they have purchased 1 more machine in addition to the existing 2 machines. The second example, the company has 2 machines. They will throw away one of the machine. Throw away means what? Dispose. Or I'll simply say they will replace one of the machine with a new machine that was produced this year. Don't say both the cases or both the examples are one and the same. Absolutely no. I repeat. Example 1, company has 2 machines. It has purchased 1 more machine which was produced this year. Example 2, the company has 2 machines. It has purchased 1 more machine that was produced in this year, but this is because they are going to throw away, they are going to replace one of the machines. Now, is it okay if I say in both of the examples, this machine is nothing but part of this year's GDP? Let me know. In both of the examples that I've given here, I've purchased machines. Both of these machines are part of GDP of current year. But now tell me, in which of the 2 examples, the production will increase? Look at it. Just look at it. In which of the 2 examples, the production in the economy will increase? Some of you are very much confused. I hope it is only in economics. I hope it is just in economics. Some of you are saying, sir, in example 2, production will increase. How, my dear, you tell me? How you tell me? Because at the end of this, the company in the second example has two machines, will replace one of the machine with new machine, right? So let's assume 10 units are the production, 10 units. So one machine will produce a 10, second machine, because at the end of it, they will have two machines. How much production they will do? How much production they will do? 20 units. But in the example one, there are two machines. In addition to the two machine, I've purchased one more machine. Now tell me how much will the production in the example one? 30 units. How much will be the production? 30 units. Again, right, two of you are saying how production will change. I'm assuming per machine, they are going to produce 10 units. For every machine, they are going to produce 10. So in example one, we will have 3 machines. You'll produce 30 units. Is it difficult? Is it difficult? Per machine, 10 units. 3 machines, 30 units. In the example 2, per machine, 10 units. You have only 2 machines, 20 units. Done? Now please understand the next point. Please understand the next point. When you calculate GDP, lot of machines will be produced. Agreed or not? When you're talking about goods, lot of machines are produced. And those machines are counted as a part of GDP. But now look at the next point here. Don't you want to find out whether these machines are used for replacing existing capital or adding to the existing capital? Understand the point here. Understand the point. Don't worry about calculation. Understand the point. When you calculated GDP, you have counted lot of machines which are produced in India as a part of GDP. But now the question arises, using the GDP value, let's say GDP value is 100 rupees. Now tell me, out of this GDP value of 100 rupee, can you find out how many machines that were produced out of this 100 rupee were used for replacing existing capital, or the machines were used to the addition to the capital? Can you find that information? I hope you understand my point. Can you find that information out of this GDP value of 100? Can you find it out? Absolutely no. What is the GDP? What is the market price? That's it. But in these two examples, tell me, right? Tell me, if you are the Prime Minister of India, at 8 o'clock, 10 a.m., 8 to 10 a.m., I'm making you the Prime Minister. If you are the Prime Minister of India, would you want India to have, right, or India to function on example 1 or example 2? Which one is better for you? I hope you understand. Would you want India to be in example 1 or example 2? All of you will agree? Sir, example 1 is always better. Or some of you are saying example 2. How? I'm actually dumbfounded. How example 2? When you say example 2, how you tell me? Right? Because that is wrong. Because you are getting 20 units in example 2, you are getting 30 units in example 1. But no, sir, I want to produce less. Then maybe do not become Prime Minister then. Right? So example 1 is always better. Example 1 is always better. That is, all I'm trying to say is simply this. The GDP data will not tell you how much of the goods that you have produced is used for replacement of the capital. How much of the goods you have produced, right, has been addition to the existing capital. If India wants to move from $3.5 trillion, simple idea. If you want to move from $3.5 trillion to, let's say, $5 trillion, should you keep on replacing capital or add to the capital? At least now it should be very clear to you. If you want to move from 3.5 to the $5 trillion, you should not replace capital. You will keep on replacing capital means some of you will have this argument. Sir, but new machine can have more productivity. Of course, yes. I did not say that. Even if you account for it, some of you will say the new machine will have more productivity. Even then, let's take your example. Second new machine will produce 15 units. Let's take your own example. Second machine, that is a new machine, will produce 15 units. In the second example, how many units will produce? 10 plus 15, 25. In the first example, how many units will produce? 10 plus 10 plus 15. Always example 1 becomes better. I hope you understand. Always example 1 becomes better. So any doubts in understanding this concept? We'll understand NDP now, don't worry. If you know the concepts, it becomes very easy. Right? That is, whatever machines are produced, some of it will be used for replacement of the machinery, and some of it will be addition to the existing machinery. But as far as possible, out of all the goods which we have produced, we would like most of it to be addition. We do not want replacement. As far as possible, we want it to be addition to the existing machinery. Okay, done? Any difficulty here? Sir, why are you doing all of this circus? There is a reason. Come to this. There's a term called as a depreciation. There is a term called as depreciation. Right? What is this depreciation? You purchase a machine today. Let's start. You want to manufacture the bottle. You purchase a machine to manufacture the bottle. Over a period of time, the machine becomes old. Let's say after 10 years. Will you replace the machine or not? Just think of it. Will you replace the machine or not? So no sir, I'll keep on using the same very old machine. Then my dear, production will be affected. Let's say after 10 years, you will throw away the old machine and you will purchase a new machine. Now please understand this. The money that you spend, the value to replace old machinery with a new machinery, that is called as depreciation. Is it okay? Right? How much money you spend to replace the old machine with a new machine, that is, there is a worn out capital. They will use a technical term here. They will say worn out capital. Right? Best example of a capital is what? Machinery. Can you keep on using the same old machinery? Absolutely no. You will have to throw away the old machine, replace that with a new machine. Now, how much money you spend for that? That is called as depreciation. I know some of you are from commerce background. Don't insert that commerce concept here. Understand it simple. I know. Right, sir? No, sir. Some of you are writing. You're wrong, sir. Depreciation is the expenditure incurred for maintenance and repairs, etc., etc. That is basically an accounting concept. I know that. You also know that. Don't insert that here. Simple idea, more than sufficient. What you need is, you need to spend money, purchase a machine, replace that with old machine. That method is called as, or that expenditure is called as depreciation. Right? That is called as depreciation. Now, let me ask you a simple question. Let me see how many of you actually think correctly here. Let me ask you a question. If India's depreciation is very high, is it good for the Indian economy? Let me check. If India's depreciation, that is in Indian economy, if the depreciation rate is very, very high, is it good for the economy? Answer is no. Answer is no. You should not be confused about it. Answer is no. Why, sir? Right? Why, sir? Can I put it in a statement like this? If the depreciation is very high, it simply means a large part of GDP, that is, let's say, capital machinery, is used for replacing of the machinery, not addition to the existing capital. Is it okay? I'll repeat the statement. You have produced a GDP for this year, let's say 100 crore rupees. And in this year, depreciation value is, let's say, 50 crore rupees. What does it mean? What does it mean? It simply means 50 crore out of your GDP value is not addition to the capital. It is addition to the, it is replacing the existing capital. Right? Don't you think productivity will suffer because of it? Just think of it. Don't you think there could be, that is, if the depreciation is very, very high, there could be stagnancy in the economy. You will keep on replacing machine, but the production does not improve because a lot of GDP you will use it to replace machinery. Right? That is the reason, please understand, rather than looking at only GDP, there is one more indicator now. That is net domestic product. What is a net domestic product? Look at the definition. It is calculated by subtracting the value of depreciation of capital from the GDP value. Sir, why should I subtract from GDP? Simple, because GDP is giving you all the value of goods and services. Part of it you are taking to replace existing capital. That's the reason you want to find out how much of the GDP is actually addition and how much is actually replacement. Now, is it okay? Can I go to the next point now? Understand this carefully. Is it okay if I say that if NDP becomes a GDP, that is the best case scenario? I hope you understand this. If NDP becomes equal to GDP, that is the best case scenario. Best case scenario means what? Whatever you have produced, whatever capital machinery you have produced, whatever capital you have produced in this year, none of it is used for replacement. Everything is addition. Is it okay? I'll repeat it. If NDP becomes is equal to GDP, right, it simply means whatever you have produced, none of it in this year will be used for replacement. It will always be used for addition to the capital, which is good for the economy. That is the reason UPC will confuse you. They will say that if the gap between NDP and GDP, I repeat, if the gap between NDP and GDP becomes narrow, it is good, they will say. Is it okay? I am putting it in a statement. If the gap between the GDP and NDP becomes narrow, narrow means what? Smaller. It is good for the economy, they will say. Of course, yes, it is good for the economy. Because a lot of the machinery that you have produced, lot of the capital that you have produced, you are going to add to the production, not replacement of earlier capital. That is the basic idea. That is the basic idea of NDP here. But sir, if depreciation is high, won't it means high production in the economy? How? You tell me. How, my dear? That's the reason I started with example. That's the specific reason I started with example. Right? What was my argument? If you are going to add capital to the existing capital, production would increase. But compared to that, if you are going to use the capital to replace capital, production will not increase. The example is there right in front of you. Even then you are asking the same question. Example 1, are you adding capital or not? At least look at the example. Are you adding the capital? Of course, yes. In example 2, are you replacing capital? Yes. Now look at both the examples. Where do you think production is higher? Of course, in example 1, production is higher. To the existing capital, if you add more capital, production should increase. But if you are going to replace capital, compared to the previous example, production will not increase. How? What is your example? You tell me then. You want to disprove certain theory in the economy, you tell me what is your theoretical understanding. So argument is simple. From 1 year to next year, what happens in the economy is certain expenses are incurred to replace existing capital. That expenditure that is incurred to replace existing capital, it is called as depreciation. It is referred to as depreciation. And it represents, what does depreciation represent? Part of the GDP. Simple. Depreciation represents a part of the GDP that is replacing existing capital, not adding to the existing capital. And that's the reason I said, if depreciation of a country becomes 0, that's a best case scenario. Because in that case, none of the products, none of the goods and services that you have produced in India this year is used for replacing. Everything is addition to the capital. Right? This is net domestic product. Now, let me ask you a question. Between GDP and NDP, which is a better indicator? What I've discussed, I've given the calculation here. Let me ask you the question. between GDP and NDP, which is better? NDP is better. Can I say NDP gives you quality data? Not GDP. NDP gives you quality data. So that's the reason. Please be very careful. Please be very careful. What we are doing is we are moving from the GDP to much better indicators like this. And finally, we have discussed two concepts now. After GDP, we have discussed two ideas. One, talking about only nationality and accounting for depreciation. Simple, right? Accounting for depreciation. Now, what if you use both of them? What if you use both of them? I'll come to that. But before that, I've given an example. Please have a look at it. Imagine company A has produced a machine which was purchased by company B. And the value of the machine is 1,000 rupees. Company B has purchased the machine and has produced goods worth 2,000. So what will be the GDP? GDP will be 3,000. But what if in this example, have a look at this, what if only one machine is produced this year and that machine was purchased by company B to replace existing machine? Replace existing machine, that is basically NDP now. NDP is a GDP minus a depreciation, that is 2,000 rupees. Okay, that is the basic idea of net domestic product. It is a much better indicator compared to GDP. And finally, NNP, net national product. Net national product. What is this idea of a net national product? Simple. Net national product is the market price of all the final goods and services which are produced by the nationals of a country, after adjusting for depreciation. I'll repeat it again. NNP is nothing but it is the market price of all the goods and services which are produced by the nationals of a country. I'm using the term nationals. Some of the books will also use the term normal residents. Much more technical. Again, don't run behind definition of normal resident. So nationals of a country after adjusting for depreciation. Right? Now, have a look at this. How can I calculate net national product? How can we calculate net national product? First, you can start with GDP. You're at GDP. There are two ways. You can directly write like this. NNP is equal to GNP minus depreciation. Or you can basically say GDP. You can start from GDP. Now you can adjust it for net factor income from abroad. What you get is gross national product. And from the gross national product, you can adjust for depreciation. What you get is net national product. Any difficulty? Please do let me know. Can you start from GDP? Of course, yes. Right? GDP, adjust it for NFIA, you'll get GNP. Right? Because you need nationality here. And within this also, you need to account for depreciation. So I will account for depreciation. Right? Then you will get NNP. Any difficulty? Any difficult? What's the difference between NNP and NDP? My dear, I'm explaining that only. Don't you think depreciation is different? Depreciation is the difference between both of them. Explaining that, you're typing that. Focus on the discussion always. That is a net national product. Because in NDP, you're basically worried in India, how much is the GDP? And out of that, how much value of the GDP will be used for replacing machinery, replacing existing capital. Whereas in case of NNP, you're not worried about India. You're worried about nationals of India. How much is the total value of final goods and services produced by Indians or nationals of India, and you want to adjust it for depreciation. Now, is it okay if I say NNP is a much better indicator compared to GDP? Think of it. NNP is a much better indicator compared to GDP, even GNP, even NDP. If you want to write them in, let's say, improvement in the quality, right, you can simply write starting with GDP. GDP doesn't give you quality data. That's the reason we calculated GNP. We wanted to find out how much all of us are producing. But within this also, whatever we are producing, some of it again will be used for replacing capital. I will adjust it with the depreciation. I will get NNP. Don't you think that is much better indicator? A much qualitative indicator, because we are talking about only the nationals. Only the nationals, right? Indian nationals. Right? So how do we get this? This is the formula. NNP is equal to GNP minus the depreciation. Right? Or else you can write from GDP, arrive at NNP. Any difficulty, please do let me know. Right? So net national product, it is the market price of all the final goods and services which are produced by the citizens or the nationals of a country after accounting for depreciation. Okay, now I will use NNP itself. But use NNP to calculate one more formula. Last one for you people. Last one, have a look at this. What I've done is, right, do you remember the formula? Earlier we have used this factor cost plus taxes minus subsidies is equal to market prices. Is it okay? Is the formula okay? The basic formula. I'm not writing production, product, etc. The basic formula. Okay, so factor cost plus taxes minus subsidies is equal to market prices. Now, if I say NNP, net national product, the net national product is calculated using market prices. Just like GDP, because we have used GDP, right, in the calculation of all of this. GDP is calculated at market prices. So NNP is also calculated at market prices. But don't you think even the market prices, even if you take market prices, that is not the right representation? Why? Because in the market prices, we have accounted for taxes as well as subsidies. When we took the market prices, we have adjusted the factor cost with the taxation as well as subsidies, which is a better indicator now. Within this also, which is a better indicator, calculating at market prices or calculating at factor cost? You will realize that it is better to calculate at factor cost. Again, some of you are confused. Please understand, we are calculating at market prices because of the international system. I hope you understand it. I've told you that also. The United Nations introduced the systems of national accounts. And that's the reason now we have also started calculating at market prices. But don't you think, understand this carefully. Imagine the factor cost is 100 and let's say, right, the difference between taxes and subsidies is 20 rupees today. Market price is 120. Now, what if the market price increases to 130 rupees? What if the market price increases to 130 rupees? Does it mean that you're earning more income? Does it always mean that profits have increased? Just think of it. And underline the term, does it always? The market price has increased from 120 to 130. Does it always mean that wages have increased? Does it always mean that your profits have increased? Absolutely no. What if it is same 100, but the difference between taxes and subsidies is now 30? That can also happen. But tell me, higher taxes, government imposing higher taxes, does it mean productivity is increasing? Is the logic okay now? Is the logic okay? Right? The government is imposing taxes, and as a result of this, the market price could be higher. And when the market price is higher, you will also get NNP higher. But does it mean that your productivity has increased? Does it mean that you're earning more income? Absolutely no. That is the reason what we do is, we already have NNP at market prices. Rather than calculating NNP at market prices, now we will calculate NNP at factor cost. How do we do that? Simple. Formula is there. We will keep a factor cost on one side. We will take remaining, that is the taxes and subsidies, on the other side. That is factor cost is equal to market price minus taxes plus subsidies. Any difficulty? Simple CSAT concept. Simple CSAT, not even CSAT, high school. Right? In high school, your faculty would have told you, your teacher would have told you, when you have this plus on the other side, and if you shift it to the other side, make it minus, the symbols will reverse. That is exactly what I've done. Factor cost is equal to market price minus taxes plus subsidies. Now this, if you calculate for ENNP, that is for all the individuals, all the nationals of India. If you calculate for ENNP, that is a net national product, if it is calculated at factor cost, this is referred to as a purest form of national income. Is it okay? This is referred to as purest form of the national income. Right? Is it okay? Purest form. Sir, why purest form? Follow this carefully. Am I accounting for taxation here? Accounting means, am I adjusting with the taxes? Yes. Right? I'm removing the impact of taxes. Am I removing the impact of depreciation? Yes. Am I removing the impact of subsidies? Yes. Am I calculating this only for Indian citizens, Indian nationals? Again, the answer is yes. So what you have done is, you have accounted for depreciation, you have accounted for right the taxation, subsidies, and production done by only nationals of India. Don't you think that is a purest form of income that we can calculate for India? Is it okay? This is the purest form of income that we can calculate for India. That is NNP at factor cost. I've written that here. Have a look at this. Right? It's a purest form of income that we can calculate for India. This is the discussion regarding NNP at factor cost. And done. These are the indicators which are there in the newspapers. I'll connect it to current affairs now. I'll connect it to current affairs. How many of you have read the newspaper article where they have said, right? How many have read that particular article where they have said the national income, that is per capita income, has doubled recently? Right? Please read that article. It is important. Please read that article. It's important, by the way, for civil services. And when they talk about national income, you tell me what are they actually looking at? You tell me what are they looking at? Are they looking at GDP here? I hope you understand. Are they looking at GDP? Do you think GDP will represent national income for you? No. They are talking about NNP. They simply are referring to, right, NNP. So please be very careful. NNP was there very recently in the newspaper. Right? It was there in the newspaper. Done. So these are the indicators. Any difficulty, please do let me know now. These are the 5 indicators I wanted to discuss. GDP, GNP, right, NDP, NNP, and NNP at factor cost. NNP at factor cost. So why factor cost? Why are you talking about factor cost? Simple. We are calculating GDP at market prices. I hope you understand. GDP at market prices. The GDP at market prices could increase, right, leading to higher NNP as well. But that rise in the market prices may or may not happen because of only factor cost. Because there is a taxation, there is a subsidy also. That's the reason what we are trying to do is, from the NNP at market prices, we are removing the effect of taxes as well as subsidies. So that even this impact of taxation and subsidies will not be felt on whatever income we have earned. That's the reason I said NNP at factor cost is much better. Okay, done. So what are the limitations or issues related to calculation of all of this? One, availability of data. Getting the data is very, very difficult. Availability of data is very difficult in India. Why? I told you, lot of these service providers as well as manufacturers, etc., these are not registered. And when they are not registered, informal, how do you think government will be able to collect the data? But that doesn't mean, understand the next point as well. That doesn't mean that we do not account for informal economy. Is it okay? That doesn't mean that we don't count informal economy. Absolutely no. For that also, what government does is a lot of surveys are conducted, just estimates are used, right? Because these are not registered, you will not be able to get exact data. You will not be able to get it. So what do? We conduct surveys in the informal market, get certain estimates. First one is availability of data is a problem. Second one is a time lag. Time lag means what? The gap. The time period that is taken for the government to collect the data and give you result. I'll connect it to current affairs. Just let me know whether you're making sense of it or not. Very recently, NSO stated that for the third quarter means what? October, November and December. For the third quarter, India achieved a GDP growth rate of 4.4%. Now, when did you realize that we have achieved a GDP growth rate of 4.4%? When did you realize it? You realized about it in the month of, let's say, March. You realized it in the month of March. So understand this carefully. You came to know that you have not performed very well after 3 months of performance. Is it okay? That is the time lag I'm talking about, right? I'll repeat it again. You came to know that your growth rate was lower after 3 months of the time period getting over. That is the time lag I'm talking about, right? Time lag. Lag means gap is there. So the time period is already over, and 3 months after that, you have come to know, right, performance was not good. Don't you think better would have been, right, somewhere in the month of, let's say, January? Again, please understand, I'm not saying government is wrong. Do not twist everything and make it political. Sir, then why? Why is there a delay like this? There is a delay for a simple reason. India is not a very small economy. It's not that we have only 10 companies in India. We have lakhs of companies. Informal economy is very large. Lot of surveys have to be conducted. Lot of data has to be collected, then arranged, analyzed. Then the data or result will be given to you. But problem is this, because we are taking a lot of time to give the result, right? This gap, right, is longer. It's 3 months like this, right? So what would be the benefit? If the gap is reduced, what will be the benefit? I can react much sooner. Is it okay? Right? I can react much sooner. I can implement many more, right, better reforms at the same point of time. Next one, existence of non-monetized consumption. Right? What do you mean by existence of non-monetized consumption? This is what NSO says. Even in certain parts of India, imagine agriculture labor is used. People will work in agriculture sector. They are not paid salary. They are paid in food grains. I hope you understand this. Right? Imagine I'm working in your field. You will not give me money. Rather, you will give me, let's say, 10 kg of food grains at the end of the day. This is non-monetized. Non-monetized. Non-monetized means what? Money value is not given. For whatever services you have provided, equivalent value of rupees is not given. Food grains are provided. This is non-monetized consumption. Even in case of services provided by the housewives, right, non-monetized, value is not allocated. Next one, parallel economy, that is black money. Parallel economy, that is example of a black money. Black money is not counted. Now, some of you will have a look at the term parallel economy. Sir, why are you referring to the term as parallel economy? Simple. Let me ask you a very simple question. All of you look at it. How many of you can say with surety, this 100 rupees white? Again, when the term white and black money is used, don't think that color has to be white. I hope you understand. Don't think that color is white. Absolutely no. How many of you can surely say this 100 rupees white? Or how many of you can surely say this 100 rupees black? There is absolutely no guarantee. But understand this, right? Can I use this 100 rupee? Imagine this is 100 rupee black money. Can I use the 100 rupee in the market just like white money? I hope you understand. Can I use this 100 rupee just like white money to purchase goods and services? Now look at the next statement. This 100 rupee, which is black money, it is getting circulated just like white money, parallel to white money. Parallel means what? Side by side. Just like white money, it is also getting circulated. Hence, this is called as parallel economy. Any difficulty in understanding this? Hence, this is referred to as a parallel economy. Because just like white money, this will also get circulated. Right? Hence, this is black money is referred to as parallel economy. Okay. And finally, whenever you talk about GDP, GNP, etc., we do not consider what is the impact of this on environment. We do not consider what is happening regarding, let's say, poor people in India. What is happening to, let's say, children in India. We don't get all of that information using the GDP. Is it okay? Right. So these are some of the limitations or issues. Third point, I'll repeat it again. In certain parts of Indian economy, rather than paying money for goods or services, something else is paid. For example, they will give you again goods. They will give you again certain food grains, which means whatever services you have provided, price is not given, money is not given. Hence, this is basically non-monetized consumption, cannot be counted as a part of GDP. Okay. Next concept, per capita income. PCI, per capita income, PCI. Very recently it was there in the newspaper, please be very careful. And two students asked, in which newspaper? Except Hindu. I have not seen this in Hindu, but again, it could have been mentioned here and there in the corner. I don't read complete Hindu, I focus only on economics page. Economics is my area, that is where I focus. But as far as I know, even in those pages, it was not discussed. But in other newspapers, a lot of discussions happened. That is, understand this, what is meaning of per capita income? Per capita income is nothing but on an average, how much is the earning per person? On an average, how much is the earning per person? Sir, what do you mean by earning per person? I'll give a very simple example. Imagine, right? Imagine India's the net national income. I hope you understand. India's net national income is 100 crore rupees, and there are 10 crore citizens in India. There are 10 crore nationals of India. So per capita income will be how much? Per capita income will be 10 rupees. Any difficulty in understanding this? I'm taking simple numbers, very, very simple numbers, where you don't even require calculators. Right? So we know that what is the national income? We know what is the national income. So where will I get national income? My dear, last week when the GDP data was published, NSO published around 20-page document. They published around 20-page document. And in all these 20 pages, all the data was given. So you can easily get access, but you don't need it. So you know what is the national income? You divide the national income with the number of population, or with the number of people, population of Indians. What you get is basically the idea of a per capita income. Sir, but can I calculate only for national income, that is net national income? Absolutely no. You can use the per capita income even in the context of GDP. You can use GDP, calculate per capita. But please understand, follow this carefully. If you calculate GDP per capita and also calculate NNP per capita, which is net national income, NNP per capita, you tell me for us which is a better indicator to find out how Indians are performing. How Indians are performing, which is a better indicator? NNP per capita. Right? I hope you understand. NNP per capita is a much better indicator for us. But MOSPI, Ministry of Statistics and Program Implementation, will give the data for all. They will give you what is GDP per capita. They will give you, right, GNP per capita. They will also give you NNP per capita. But for calculation of national income, which is the most important for us, NNP per capita. And if you look at the latest data published by the government, NNP per capita is 1.72 lakh rupees. NNP per capita is 1.72 lakh rupees. Now, is the NNP per capita, is it a good indicator? Is it the best indicator that you can think of? Answer is simple, no. Even the NNP per capita has issues. Understand this, right? Even NNP per capita has an issue. What is an issue? First one, whenever you talk about per capita, either GDP, NNP, doesn't matter. Whenever you talk about per capita, it is simply the concept of averages. CSAT now. Let's shift to CSAT. Right? So understand this. Whenever you talk about per capita, it is simply averages concept. That's it. It is an average. For example, imagine there are three people A, B and C. There are three people A, B and C. A is earning 0 rupees, B is earning 100 rupees and C is earning 900 rupees. Total value of income, right? Assume only three people are there in the country. Total factor incomes will be how much? 1000. That is the GDP. You divide it by three people because three people are there. What is per capita here? 333 rupees. Per capita is 330. So understand the logic here. You might simply get a per capita, that is representation of, right, how much on an average Indian is earning. But does it mean that 330 rupees is earned by everyone in India? Does it give you a true picture as to what is happening in the economy? Right? Absolutely no. It doesn't give you a true picture. Why? There is a lot of income inequality. Is it okay? Especially for a country such as India, which has lot of income inequality. Very, very high income inequality. Don't you think, I'll use a statement now. Have a look at this. Don't you think the per capita income will mask income inequality? Is the logic okay? The per capita income will mask, will hide, mask means hide, will mask the huge amount of income inequality in India, wherein in the last 2 years, right, thanks to pandemic of course, wherein we have seen small part of population has started earning huge amount of income. They have earned huge amount of income, whereas large part of the population is earning throwaway, that is peanuts in India. Very, very small amount of earnings. But per capita income doesn't disclose that. It doesn't give you away that information. Right? So argument is simple. Per capita income is an indicator. That's it. It's an indicator. Is it the best indicator? Is it the only indicator based on which you can come to conclusion regarding Indian economy? Absolutely no. But can I say this? Can I say this? Compared to GDP, per capita income is much better. Have a look at this. Can I say this? Compared to GDP, per capita income is a much better indicator, right? Because that is telling you on an average how much all of us are earning. Because have a look at this, right? Again, some of you are confused here. Have a look at this very carefully. Imagine your GDP increases from 100 rupees to, let's say, 120 rupees. Your GDP increases from 100 to 120. But at the same point of time, what if your population increases from 5 people to 8 people? Apply the logic now. At the same point of time, the population increases from 5 people to 8 people. Here per capita was 20. Here per capita is 15. Which means, right, again income inequality is there. I hope you understand, income inequality is there. Right? What is the impact? Impact is the per capita has become lower now. Per capita is lower, which means now there is a lot of pressure on certain houses. In certain houses, now the population has increased. They will have to provide for more people. I hope you understand. Because GDP doesn't consider population. Per capita considers population. That's the reason I said GDP can be increasing. But what is the impact of it? Per population or per capita, per person, has the earnings gone up or gone down? That's also equally important, because that will give you much better quality information. So per capita income is always a better indicator, right? So these are certain points. Please be very, very careful. So what are the issues? One, it is just an average, right? It is just an average. It doesn't give you any quality information. It is just an average. Does not provide information about various sectors. If I simply say per capita income in India is 1.72 lakh rupees. Now tell me, how much of this per capita income has come from agriculture sector? Right? How much of it has come from other industries? And that is also equally important. I'll tell you why. When you look at only the per capita income, right, the number of people in the agriculture sector is very high in India. Generally, around 49% of the population works in the agriculture sector. Around 49% works in the agriculture sector. But can you come to know how much is the per capita in the agriculture sector? Looking at the overall data, looking at 1.72 lakh, can you come to know how much per farmer they are earning? Absolutely no. Now again, you'll have to dissect. Again, you'll have to keep on dissecting the data. Only then you will understand how much per farmer earnings are there. Third one, generally per capita income, PCI. I hope you understand. PCI is a representation of standard of living. But because they say that if PCI increases, standard of living, right? Again, average. It's an average concept. Standard of living in the overall India starts to increase. Right? People are earning more income. People will consume lot of better goods and services. But the standard of living is not affected only by PCI. There are other factors which will have an impact on standard of living. For example, how much is the government expenditure? That is, how much is the subsidy given by the government? Think of it. If you have a data and have a look at it, let's say per capita for a farmer, per capita income for a farmer is, I'll just throw an arbitrary number here, 5,000 rupees. Per capita for a farmer is 5,000 rupees. Now you tell me, don't you think the farmer will get a lot of assistance from the government? Yes or no? Don't you think the farmers will get a lot of assistance from the government? The government might provide free food grains. Government might provide housing facility. Government might provide healthcare, education, PM Kisan, etc. Now, don't you think all of those subsidies will have an influence over standard of living of a farmer? Again, do not look at the term standard of living and think, right, only rich people will have a standard of living. Absolutely no. I'm saying what is the access to goods and services you will have. So the access to goods and services, it's not just affected by the per capita income, it is also affected by government expenditure. How much government assistance is provided to you. And finally, it does not give you a correct picture when you make a comparison with other countries. For example, you say per capita income of India is 1.72 lakh rupees. You tell me, looking at it, are we better compared to USA? Just think of it. Are we better compared to USA? Are we better compared to China or any other country? Answer is no. You will not be able to come to know the information. That's what I'm trying to tell you. You will not be able to come to know the information. Why? You need to understand one more concept for this: purchasing power parity. There is one more concept you need to understand for this: purchasing power parity. And have a look at this. What I've written. We will discuss purchasing power parity, but not today. We'll discuss it when I take up international trade. And why? I require exchange rate. I require exchange rate for this. Okay, that's a reason. I've not yet discussed exchange rate. We'll discuss, and trust me, there's a slide on purchasing power parity there itself. We'll understand it there. Okay. Now have a look at the data here. Should you buy heart it? Absolutely no. Absolutely no. Please do not buy out anything from this. Per capita GDP, is it given? Per capita GDP, yes. Per capita GNI, gross national income, net national income. We have basically discussed all of it, right? And when I say 1.72 lakh rupees, have a look at it. We are basically talking about the most recent data published by the government. Per capita net national income, per capita income in case of India is 1.72. Okay, what is purchasing power parity? Listen to what I'm saying. Can you listen first? We will discuss purchasing power parity when I take up international trade. I will not discuss exchange rate now. Okay. Apart from this, right, other data is also given. Please have a look at it. Now, some of you will say, sir, data here is different, data here is different. Simple. Inflation is there in the economy. Okay, inflation is there in the economy, right? Because inflation is there, we need to adjust for inflation. Now you will be worried about inflation. That's the next chapter. We'll discuss that only next. Do not worry. Okay, done. Next, two sets of important current affairs. Two sets of important current affairs. One is virtuous cycle and vicious cycle. Second one is pro-cyclical and counter-cyclical. Let's go one by one. Focus on the discussion. What is a virtuous cycle? Virtuous cycle, various factors keep on reinforcing themselves, which will lead to a positive outcome. I'm giving you the definition. Various factors which are basically, right, which are basically having an impact on each other, and as a result of this, you will observe positive outcomes in the economy. For example, GDP will increase, employment will increase, demand will increase, investment will increase, etc. So, any example of a virtuous cycle? Have a look at the cycle here. Please have a look at the cycle. Imagine government will invest in the economy. Sir, why should government invest? Can the private sector invest? Of course, yes. Anybody, right? Either the government or the private sector will invest in the economy. A simple question to you. When investment will go up, when companies will start investing, government will start investing, don't you think employment will go up? Is it okay? Right? Don't you think the production of goods and services will go up? Right? Have a look at this. The demand for raw materials will increase. Right? The demand, I've written vicious here. It's a virtuous cycle. It's a virtuous cycle. My mistake, I've written vicious. It's a virtuous. Okay, it's a virtuous. Right? So employment will go up. Production will go up. Demand for raw materials will also go up. When the demand for raw materials goes up, right, so there should be higher production. Unemployment will go down. Employment will go up. The wages or salaries which are earned by the houses will also go up. And as a result of which, again the demand will go up. Right? So this is a virtuous cycle of growth. This is a virtuous cycle of growth. And what is the outcome? What can you see in the cycle? All the positive outcomes. GDP of India is increasing. Employment is increasing. Production is increasing. Demand is increasing, which is good for the economy. Done? This is the virtuous cycle. Next is a vicious cycle. Next one is a vicious cycle. What is a vicious cycle? Exactly opposite. Various factors in the economy will keep on affecting each other. As a result of this, the whole economy will experience negative outcomes. The whole economy will experience, right, certain unfavorable outcomes, right, such as higher unemployment rate, reduced productivity, lower GDP growth rate, lower demand, lower production, etc. Have a look at this. The vicious cycle of growth. What happens in a vicious cycle of growth? I'll take an example. Imagine government has imposed a lockdown. Government has imposed a lockdown. Now, when government imposes a lockdown, what will happen to the demand for goods and services? The demand for goods and services will go down. And when the demand goes down, production also goes down. And when the production goes down, what will happen to unemployment? Right, the employment will not be there, right? That is, rather than hiring the people, right, people will be removed now. Unemployment will go up. And when the unemployment goes up, what do you think will happen to the salaries earned by the people? Salaries will also go down. Again, demand goes down. So the cycle will keep on getting reinforced. Cycle will keep on happening again and again and again. But what is the result of this cycle? What is the result of the cycle? Simple. The result of the cycle is that unemployment increases, right? Have a look at this. The production will go down, investment will go down, right, etc. So this is called as a vicious cycle in the economy. Any difficulty? Virtuous cycle means factors will influence each other, right? The overall economy will perform well. Vicious cycle means factors will react with each other or have an influence over each other. Its performance will fall down. Right? That is virtuous and vicious. Simple question. During pandemic, right, did you observe the vicious cycle? Sir, why are you discussing all of this? Tell me. During pandemic, did you observe this particular vicious cycle? Right, where demand went down, production went down, GDP went down, etc., etc., etc. And don't you think government as well as the private sector now is basically trying to achieve a virtuous cycle, promote a virtuous cycle in the economy? Right? That is the importance of these terminologies. Can be asked. Can be asked. Sir, what kind of question? Let me ask you a very simple question. Imagine a country is going through a virtuous cycle of growth. Virtuous cycle of a growth. Which of the following might be the outcomes of it? Can they ask this kind of a question? Of course, yes. Right? Imagine the economy is going through a vicious cycle of growth. Which of the following can be observed in the economy? Right? All these kind of questions can be asked. Now come to the next point. Pro and counter cyclical policy. Pro and counter cyclical policy. Now what is this pro and counter cyclical policy? Before that, let me start with explanation. I'll come back to this. Please don't worry. Let me start with explanation here. What is the explanation? Follow this carefully. Once you understand, it becomes very easy. Once you understand, it's done. There is a term called as inflation. There is something called as inflation. Now, what is this inflation? I'll come back to this. Don't worry. I'll come back to all of this. Don't worry. What is inflation? Look at the definition now. Look at the definition. I'll explain it. Look at the definition. Because to explain the pro and counter, I need inflation. What is the definition? Inflation is the persistent increase in the price level of basket of commodities. Right? The term basket simply means group. Group or collection. Sir, what is the meaning of a group or a collection? Imagine there is a house here. This house will purchase group of goods. All of you will agree? This house will purchase group, lot of goods. It will not purchase one good. It will purchase group of goods like this. This group is referred to as a basket. That is point one. Point two. Imagine the same house last year purchased a certain group of the commodities like this. For that basket of commodity, last year, the price was 100 rupees. I repeat, there is one house. The house is purchasing a basket. Basket means what? Group of commodities. And for that basket, last year, the price was 100 rupees. Today, we are purchasing the same basket. There is no change in the group, right? It's a same basket. But to purchase the same basket, now we are to pay 110 rupees. We are supposed to pay 110, not 100, 110 rupees. Now, simple question to all of you. Look at the example. Can I say that for the basket, the price level has gone up. Look at the example, right? For the same basket, the price level means what? How much money you are paying to purchase that basket, it has gone up. So if this happens in the country, if this happens in the economy, this is called as inflation. Is it okay? Right? Inflation is nothing but persistent. Persistent simply means what? Continuous. Right? Continuously, the prices of a basket of commodities has gone up. That is called as inflation. That concept is referred to as inflation. Now, are we seeing inflation in India? Let me check how many of you are reading the newspapers. Are we seeing inflation in India? Of course, yes. Right? I'll give you a current affairs data, and very soon you will come across the data again. For around 12th to 13th, read newspapers. That's the reason I keep on telling the students, read newspapers. On 12th or 13th in the newspaper, you will come across inflation data. Read that. You should read newspapers. So what is inflation? There is a rise in the price level for a basket of commodity. That is called as inflation. Is it okay? Is it okay? Now point number 2. Here itself understand this. Inflation can happen because the cost associated with the basket has gone up. I repeat. Inflation can happen because the cost associated with the goods has gone up. Sir, what do you mean by that? I'll give you a very simple example. Imagine this is the bottle, this is there in the basket. Earlier, for the raw material, you used to pay 30 rupees. Now for the same raw material, you are paying 50 rupees. What will happen to the market price of the bottle? Market price of the bottle will go up. All of you will agree? Market price of the bottle will go up. And if this is going to go up, can the basket price also go up? I hope you understand. Can the price for the basket also go up? That will lead to inflation. So understand this. One reason why inflation can happen in the economy is because cost side, or I'll simply say supply side. Supply side, that is from the supply side, prices have increased, and as a result of which inflation has happened. I'll talk about the second side now. Follow this very carefully. Second reason, second type why inflation can happen in the economy, it is because of the demand. It is because of the demand. Sir, why demand will cause inflation? Imagine only 10 bottles are supplied to the market and 100 people want to purchase the bottle. Tell me now. Right? Only 10 bottles are supplied to the market. 100 people will come to the market. All of them want to purchase the bottle. What do you think will happen to the price? What do you think will happen to the price of the commodities? Price of the commodities will automatically go up. Is it okay? Right? Price of the commodity automatically will go up. That is also inflation. Is the logic okay now? That is also inflation. So inflation can happen because of supply side. Inflation can also happen because of the demand side. These are the 2 points. Remember this. Tomorrow, not tomorrow. Tomorrow is Saturday. Many of you will have a panic attack. Next class will come back to this. Sir, why did you discuss it? I need it. I need concept of inflation here. I need the concept of inflation. Okay, first one. Point number 2. How many of you think that economy will always keep on growing without any problems? Let me know. How many of you think that there will be no problem in the economy? Always it will keep on growing, keep on increasing. GDP will always keep on increasing. Absolutely no. Can I give you a current affairs example? Can I give you a current affairs example? Pandemic. Right? Pandemic. What did the pandemic do? Pandemic affected economy, not just Indian economy, to the global market as well. Sir, but this is one example. It will not happen always. There was one more crisis in 2008. Right? There was one more crisis back in the year 2008. Third, a possibility, just a hypothetical example. What if Russia and Ukraine will have a nuclear attack on each other? And other countries within the NATO will also come into war. Don't you think that can cause widespread impact on the global economy? So again, the argument is simple. You expect the market, that is GDP, to keep on increasing, but there are a lot of factors which will have an impact like this. That's the reason there is a concept called as a business cycle or economic cycle. There is a concept called as a business cycle or economic cycle. In fact, earlier I've mentioned it and I said I'll discuss it later. Can I tell you the context? Go back to the idea of capitalism and see, under capitalism, I've written business cycle as one of the demerits, one of the concerns regarding capitalism. Now, what is a business cycle? Please look at it. Whenever you talk about economy, the economy will move in different phases. Economy will keep on moving in different phases, just like a wave, a sound wave like this. Economy will keep on moving in different phases. And what is the wave that I'm representing here? Imagine this is the GDP value. Simple. Imagine this is the GDP value. GDP value will not always keep on increasing. At one or the other point of time, it has to take a hit, come down. Will it keep on going down always? Of course no, that is a problem. So what will happen? At certain point of time, again it will revive like this. So there is a waxing and waning. Waxing and waning. That is a wave-like observation that you can make for economy. And these positions, you can see there are various positions here. These positions or these phases are generally divided into 4 types. Okay? Right? These various levels in the economy are divided into 4 types. These are expansion, slowdown, recession, and recovery. What do you mean by expansion? It is a stage in the economy where GDP is actually expanding. It is going or it is increasing at a very good growth rate. For example, from one year to next year, 8% growth rate. Next year, 9% growth rate. Next year, 8.3%. Next year, 10% growth rate. Can't you see that Indian economy, if this is achieved, we are not going to achieve this very soon. If this is achieved, economy is growing, economy is moving at a very, very good pace. That is called as expansion. That is called as expansion. But on the other hand, right, let's say there is a pandemic. Let's say there is a war between Russia and Ukraine, next level war. There is a recession in USA and, right, let's say Europe. It will affect us. It will have an impact on us. Now tell me, if there is a recession, I'll come to term recession in some time. If there is a recession in Europe and USA, do you think India's GDP will continue to expand? Don't you think there should be certain impact? What might happen is the GDP growth rate will start slowing down. Understand the term here. The GDP growth rate will start slowing down. Meaning what? Rather than achieving, let's say, 8% growth rate, we could achieve 4%. We could achieve 3.8%. We could achieve in the next year 3.4%. What has happened to GDP growth rate? You tell me. What has happened to GDP growth rate here? GDP growth rate is actually slowing down. That is called as a slowdown. So whenever GDP expands, right, grows at a very good pace, rising growth rate, expansion. But the other side of it is the growth rate will start becoming slower and slower. The expansion will slow down. That is called as a slowdown. Third one, recession. Third one is called as a recession. What is a recession? Whenever in 2 consecutive quarters, remember this, what is recession? Whenever in 2 consecutive quarters, 2 consecutive means what? Quarter 1, quarter 2, are they consecutive or not? Quarter 2, quarter 3, consecutive, yes, one after the other. Simple. Consecutive means one after the other. whenever in 2 consecutive quarters you have a negative growth rate, that is called as a recession. Any difficulty, please do let me know. Whenever in 2 consecutive quarters you have a negative growth rate, that is called as a recession. And right, have a look at this. If recession is not controlled, if you can't control recession, right, 2 quarters recession, but what if recession continues? What if recession continues? -2%, -5%, -8%, -10%. So if the recession continuously happens in the economy, right, where the GDP will drop, recession will keep on happening for 3 years like this, it is called as a depression. It is referred to as depression. The last time we experienced depression was back in 1929 and 30. Simple. The global depression, the Great American Depression, 1930s. After that, we have not experienced. But we have experienced recession very often. For example, in India itself, during pandemic 2021, there was a recession in India. For 2 consecutive quarters, we registered a negative growth rate. Okay, right? After the recession, if there is a recession, if there is, let's say, lower production, unemployment rate is increasing, investment will be done by the government. All of you will agree? Investment will be done by the government. Government will have to invest, right? Recovery will take place. Rather than private sector, government will invest in the market. There is a recovery in the economy. That is the recovery stage. Any difficulty? Any difficulty, let me know. So it's a very simple idea. First, there is an expansion, boom, but you cannot sustain it. Then there is a slowdown. Then there is a recession. Then there is a recovery. If recession is not controlled, it will become depression. And from depression, you will experience a recovery. Recession means for 2 consecutive, this is the 4th time we are discussing recession, by the way. 4th time. Earlier also we have discussed. Recession means for 2 consecutive quarters, you will have a negative growth rate. Right? You will not, your GDP value will not increase. GDP value will decrease. Right? That is a recession. Now come to the idea. Come to the idea of a pro and counter. Follow this very carefully. Do not be confused. Imagine there is a recession. Imagine there is a recession. Now, is it okay if I say during recession, private sector investment is very low? Let me know. Do you agree or not? During recession, private sector investment is very low. Why will the private sector invest? Why should they invest? Right? Because the demand is already low. And now if the private sector is not investing, who should invest in the economy? Who is left out? It has to be the government. Don't say, sir, we will invest. Recession, you do not have jobs. Right? So who has to invest in the market now? Government has to invest. Which means it is the duty of the government to promote recovery in the economy. It is the burden for the government to promote recovery. Now, how can you promote recovery here? How can you promote more employment? Right? 2 ways. Follow this carefully. 2 ways. One, government can increase its expenditure. Simple. Government can increase its expenditure. Sir, how government expenditure will promote recovery? Simple. Government will spend money and start constructing roads. Government will spend money, right, and start constructing airports. Now, when roads, airports are constructed, demand for cement, demand for steel, it will increase. And when the demand for cement and steel will increase, companies will start producing both of them. And when companies will start producing both of them, they will hire people. They will hire more people, right? Salaries going to houses will go up. If the salaries going to houses will go up, will lead to higher demand for goods and services. Did I not explain a virtuous cycle here? Did I just not explain a virtuous cycle just now? Right? So increase in the government expenditure one way, and second, reduce taxes. Simple. Increase in the government expenditure, and second is reduce the taxes. Sir, how? Imagine your income is 100. Your income is 100. Out of that, government is collecting 20 rupee taxes. So what is the disposable income? What is the disposable income? 80 rupees. Now, rather than imposing and collecting 20 rupee tax, what if the government will reduce it to 5 rupees? 100 rupee minus 5 rupee. Now, you will have a disposable income of 95 rupee. Will it not increase expenditure for goods and services in the market? Right? Will you not consume? Will you not start demanding more and more? If you demand, production will increase. Production, employment. Employment again, salary. Salary again to production. So again, a virtuous cycle can be promoted. Any difficulty here? So understand this. Stage is what? What is the economic stage here? Recession is there. Private sector investment is very low. And the demand for goods and services is already low. Unemployment rate is increasing. Unemployment rate is increasing. So I've taken one example where government will promote recovery. Where government will promote recovery. Now, before going forward, let me ask you a very simple question. Whatever government is doing in this example, I'll write it as example 1. Whatever government is doing in this example, is it increasing the recession or it is reducing the impact of recession? Think of it. Just think of it. Whatever government is doing in the example 1, is it increasing the impact or reducing the impact? It is reducing. I hope you understand. It is reducing. Let me give you another example. Let me give you another example. That is example 2. What happens in example 2? Government will increase the tax. Government will increase the tax and government will reduce its expenditure. Government will increase the tax and reduce the expenditure. Now, already in the market, investment is low. Government is also reducing its expenditure. What will happen to unemployment rate? Unemployment rate further will increase. They are increasing the tax rate. What will happen to the demand for goods and services? Further go down. Already the demand is down. It will further go down. Now, same understand this, same, the government action only, same. What is going to happen to the recession here? Will it not increase the recession? Will it not lead to more severe recession? Answer is yes. Right? So understand the logic here. Whenever any policy of the government, I repeat, understand this statement now. Whenever any policy of the government makes the situation in the economy more severe, is it okay? I'll repeat it. Whenever any policy of the government makes the situation in the economy more severe, that is called as a pro-cyclical policy. That is referred to as pro-cyclical policy. In this example, what is the situation in the economy? Recession. And the policy of the government, is it not making the recession much more severe? Yes. Hence, pro-cyclical. And if government policies reduce the impact of the economy, reduce the severity of the situation, such policies are referred as counter-cyclical. Such policies are referred to as counter-cyclical. Any difficulty, please do let me know. Right? Whenever government policies, there is a situation in the economy, there is certain phase in the economy. If the government policies will make the phase much more intense, will add to the phase. That is basically pro-cyclical. And if government will reduce that impact of the phase, will reduce the severity, that is right counter-cyclical. Give example of pro-cyclical. My dear, what is this example to? You are asking me, give example of a pro-cyclical. What is this example to? Right? What is this pro-cyclical? My dear, listen to whatever I say. Please listen. What I said was, if government increases the tax rate, what will happen to demand? You tell me, what will happen to demand? Demand will further go down. If government will reduce expenditure, what will happen to investment? Investment will further go down. GDP will further go down. So what will happen? Recession will become much more severe. So any policy of the government which increases the intensity or the severity of the economic phase is called as pro-cyclical. And any policy of the government which will reduce the intensity or severity of the phase is called as counter-cyclical. Right now tell me, if there is a recession, should government follow pro-cyclical or counter-cyclical? If there is a recession, should government follow pro-cyclical or counter-cyclical? Government should follow counter-cyclical. Now what about boom? Come to the table here. What about a situation of expansion? Whenever there is an expansion in the economy, you tell me, you already know the features now. Expansion means what? Growth is very high. Growth is already there in the economy. Private sector, they are investing. Right? People are having jobs. People are earning more salaries, etc. So during expansion, demand, is it there in the market? Is it okay? Is there a demand during expansion? Yes, demand is already there. What about employment? Employment is already there. What about private sector investment? It is already there. Now have a look at example 1, last concept. Example 1. Government will increase expenditure. Government will also start spending lot of money. And government will reduce the tax. Government will reduce the tax. What is the impact of it? If government will also spend a lot of money, government will reduce the taxes, don't you think the demand will overshoot? I hope you understand. Demand will be very, very high. And if the demand keeps on increasing like this, will it cause inflation or not? I've discussed inflation already. If the demand keeps on increasing like this, goes up by a very high volume, will it cause inflation or not? Of course, yes. There is a danger that this policy of the government might make the economy much more severe, will add to the intensity in the economy. On the other hand, let's say example 2. What does the government do? Government simply says, private sector is investing. I will control my expenditure. Because investment anyways is there. Demand is very high in the economy. People are earning lot of money. I will collect more taxes. I will increase taxes and collect more taxes because people are earning more. Now, don't you think if government will control its expenditure and collect more taxes because the incomes are very high, demand will be controlled in the economy? Is it okay? Demand will be controlled in the economy. And if the demand is controlled, can it cause inflation? Can it cause inflation? No. So understand the logic here. Understand the logic. In example 1, government policies are increasing the intensity, severity of economic phase. Whereas in the example 2, the policies are controlling, reduce the intensity of the phase in the economy. Can I call example 1 as a pro-cyclical and example 2 as counter-cyclical policy? Is it okay? Can I call example 1, and again please understand, Don't compare it with previous example and confuse. This is during expansion. We are talking during expansion now. During expansion, if government increases its expenditure, reduces the taxes, it could cause inflation. Pro-cyclical policy. And during growth, during expansion, if government will reduce its expenditure, increase the taxes in order to control demand, that will lead to controlling of inflation. That is counter-cyclical policies. Right? I've given the examples here. Please have a look at it. And last point, government should generally have counter-cyclical policies. Is it okay? Last point, government should have counter-cyclical policies. During growth, do not add to the demand. That will cause inflation. During, right, let's say recession, do not withhold your expenditure. That will cause a recession. Okay, that is the basic idea of, right, the counter-cyclical and pro-cyclical. And there are two terms here, fiscal policy and expansionary contractionary. Fiscal policy means government taxes and expenditure. Right, for example, government will announce budget. All of you know this? Government will announce budget. What do you think government will do in the budget? Announce expenditure, announce taxation. So any policy of the government related to the expenditure and taxation, it is called as fiscal policy. We'll discuss taxation later. We'll discuss budget later, don't worry. And last point, contractionary means reduce. Simple. Contractionary means reduce. Expansionary means increase. So whenever there is, right, whenever there is expansion, whenever there's a growth in the economy, government should not have expansionary policies. Government should have contractionary policies. Whenever there is a recession in the economy, government should have expansionary policies. That is counter-cyclical. Done? That's it for the day. That's it for the day, right? Let's stop the discussion here. Any questions? Please raise it now. Questions are there. Previous year questions, we'll take it up next class. Don't worry. What is stagflation? We'll cover it under inflation. We'll cover it under inflation. Free buys, how it impacts recession. What do you mean by free buys here? You tell me free buy means what? What government, when government is increasing taxes and increasing expenditure, then my dear, you have to look at the policy in the context of the economy. Right? If you simply say government increase expenditure, pro or counter, how do I tell it? You tell me in what context. If government is increasing expenditure in the context of, let's say, right, economy where it's already expanding, that's a wrong policy. Okay. Take extra class if we are lagging. No, we are not lagging. We are going as per the schedule. Don't worry. We are going as per the schedule. Who controls inflation? Next class, we are yet to discuss inflation. We are yet to discuss inflation. Next class, we'll discuss. Don't worry. Pro-cyclical is bad. Why did government introduce it? Because understand this, you never know to what extent economic cycle will exist. You never know. I hope you understand. Do you know what is going to happen to the inflation after 1 month? You tell me. Right? There are so much uncertainties. That's a reason. Right? So there are so many uncertainties. We will increase expenditure, but suddenly after 2 or 3 months, we'll realize, okay, it has caused a lot of inflation. Then we need to course correct. Simple. Previously, you told about limitation issues. I want to know the topic. What? What do you want to know the topic? I don't understand the question itself. Sir, if there's a problem in the PCI, why are we still using? My dear, you tell me what is the alternative. What is the alternative? You tell me. There should be certain parameter, right? I did not say that PCI is the best indicator. No. Compared to all indicators, PCI is a better indicator. So we need certain indicator. So what is the next alternative? There is the concept of inclusive growth. We'll discuss that later. Don't worry. The number 21 in MCI 21 represents a 21st century. As it is technology driven, yes, you are right. Okay, the limitations that you gave, the limitations are for what? I gave you one slide, exclusion. Exclusion is while calculating GDP, you do not include them, you exclude them. Limitation, whenever you calculate national incomes, these are certain limitations to the calculation. Okay, done then. So let me stop the discussion today here. We'll continue in the next class. Next class, not tomorrow, next class. We'll continue with the next class. Questions are there, we'll cover it. Then we'll start with inflation. Okay, done. Right, so let's stop the discussion today here. Let's continue in the next class.